This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Why are we upset if we're creating jobs?
Inflation's still a thing out there for the everyday consumer.
With Lisa Mateo on markets.
The economic calendar jam-packed today.
And Michael Barr with news.
Tensions between the U.S. and China have heated up even more.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, John Tucker in for Lisa Mateo. How did that happen?
Sorry.
It's just not going to be this. Are you going to Costco this weekend?
I'm the last person. I don't have a Costco membership. I usually steal one from David Gura. They think
Happy
we
to
look
spread
alike.
that around.
That's true. John Tucker in for Lisa Mateo. Michael Barr in charge of Major League Baseball playoffs. Tigers killing it. Yankees destined. I can't believe
10-1. Was that the outcome?
10-1.
I saw that.
Yeah, we will not be speaking with Mr. Rubenstein today. We got a huge Friday. What a week. Yes, we'll talk about the traffic. Yes, we'll talk about Gura's 80-hour work week here as he looks at the poll. But I just want to say, coming up, we are going to talk to David Gura about this poll with a legit sample size, legit math as you can get in a poll. And it's got some interesting nuances on Trump, Harris, Trump. We'll do that here in a minute. We say good morning to you across the nation, your commute, Apple CarPlay, Android Auto. Good morning to all of you in the quarter. 99.1 FM in Washington. Sorry about Baltimore. The Nationals never were in it. Bloomberg 1130 in New York, home of the dreaded Yankees, and in Boston. Boston's not even in the conversation.
Not in the conversation.
92.9 FM. Good morning. Wait till next year. We'll wait for the from the Interactive Broker Studios, our Bloomberg Business Flash, John Tucker.
Let me do this. I'm going to start with China, the Shanghai Stock Exchange. Overwhelmed CSI 300 index of large caps soaring 4.5%. So the Chinese stocks with the biggest weekly rally. Get this, in 16 years, there were some glitches as $101 billion worth of stocks traded in just the first hour of trading there. Of course, the Chinese government in full stimulus mode. And to the extent that inflation still is in the front seat, the Federal Reserve's preferred inflation indicator, that's out this morning. We'll be waiting for that, give you that live. Right now, ahead of that, Dow futures 21 points lower, S&P E-mini futures down 5, the Nasdaq futures 39 points lower. Of course, the S&P 500 finishing up a record yesterday. I think it was the 42nd record for this year. Oil steadying after a sharp two-day drop. Price is still on course for a substantial weekly decline. And NVIDIA shares, they are the most active this morning in the pre-market, down about 0.9%. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. David and Tom.
John Tucker, thanks so much. We have Nassim Taleb with us here coming up in the 9 o'clock hour. We start stronger now with Sam Stovall with CFRA, who understands with humility the probability and the theories of Nassim Taleb and brings it back to fundamental analysis. Okay, Sam, I've been dying to ask you this. The entire sell side walks away from China. They walk away from Paris luxury, selling in China. You don't take it from 5 stars to 2 stars because, out there somewhere, something unexpected is going to happen. The unexpected happened in China 72 hours ago. Why should we listen to buy, hold, sell type, Sam, if we have this unexpected like China?
Well, good morning, Tom, and thank you for the layup question. I think basically that's another reason why you have to assume that the unexpected is likely to happen. Unfortunately, unanticipated events are hard to anticipate, so that's why I think diversification remains fairly important. Mid caps, small caps, international, emerging markets have underperformed large cap U.S. in 8 of the last 10 years. And right now we're looking at S&P, looking at PE, relative PE discounts of 20, 30, 40%. So essentially, those should have been tractor beams, if you will, attracting investors to them, knowing that sooner or later the tide is going to change.
Can you be too diversified, over diversified?
That depends. I think it depends on the individual. Gerald Loeb used to say it's okay to put all of your eggs in one basket so long as you watch the basket very carefully. Whereas others are saying if you need to sleep at night, if you don't like anything, you have to own everything. So I think diversification has more to do with personality, and by being in the stock market is the important thing, because equities are the only asset class that consistently outpace taxes and inflation.
All the eggs in one basket, I believe the motto of Tom's triple leveraged all cash fund. Is that correct?
Yeah, well, I'm waiting for Stovall to give me a 6-star. If I get a 6-star call from Sam Stovall, I may buy 100 shares. Maybe an odd lot.
Sam, we're on the cusp of it being October. September is supposed to be sleepy. What's happened here? Let's look back before we look forward and put this in historical perspective, as you're so good at doing. What has made September as buoyant as it's been?
Well, you're absolutely right that September traditionally is the worst month of the year, whether you look at all years since World War II, you look at all election years since World War II, with the frequency of a decline more likely than an advance. I think it's because of the optimism of the Fed cutting interest rates. I think it's the optimism of China trying to dig itself out of its own hole. I think it's expectations that we're likely to see 15% earnings growth in 2025, and that we are on the course for a soft landing. So despite the fact that valuations look pretty pricey for the S&P in general, for technology in particular, I think investors are saying we're going to avoid recession. And as a result, we can overcome these extreme valuations with earnings growth.
What was the general response, if you can characterize it, to what happened in Washington with the Fed last week from CFRA clients? Did they exhale as this cutting cycle begins? Does it open the door to them looking at stocks and the markets at a more fundamental level, not having to focus on the parlor game of what the Fed's going to do next? Or what changed last week, and how has that sort of reshaped your perspective and your client's perspective going forward?
Well, it's a reminder that wanting is more profitable than having, because the S&P gained an average of 18% in the time between the last rate hike and the first rate cut, going back to 1990. And that traditionally we tend to breathe a sigh of relief. We tend to tread water 1 month after that. But it seems as if investors are saying, no, we want to continue with an optimistic outlook.
Sam Stovall, one quick question, 30 seconds. What's your star construct now in the Mag 7? Have you adjusted that recently?
No, we stuck with it. We're still overweight the communication services, technology, and financials, because we look 12 months down the road, and our belief was that by looking at 25 and 26 earnings estimates, we have ample reason to stay where we are.
Sam Stovall on this bull market, congratulations on your persistency. Mr. Stovall was CFRA. Lots going on now. I want to get to David Gura on this important poll, but first, with our news in New York City, Michael Barr.
Thank you very much, Tom. David, John, a new survey shows Vice President Kamala Harris has all but neutralized Donald Trump's advantage on economic issues in battleground states with 39 days until the election. A Bloomberg News Morning Consult poll shows Harris now leading among likely voters by 7 points in Nevada, 5 points in Pennsylvania, 3 points in Arizona, Michigan, and Wisconsin, and 2 points in North Carolina. Plenty of reaction pouring in to the latest poll. Bill Ferries is a senior editor for Bloomberg News.
The trend definitely breaking Harris's way so far. And one of the really interesting things about it is that she seems to be getting that momentum by chipping away at what has been Donald Trump's lead when it comes to voters' preference on, or voters' belief about who would handle the economy better. Overall, that is still an area where Donald Trump has a 4-point lead. That's down from 6 points in our previous survey.
Bloomberg's Bill Ferries. What once was Hurricane Helene has weakened to a tropical storm over Georgia. Helene came ashore last night in the Big Bend area of Florida's Gulf Coast as a Category 4 hurricane. Officials have forecast storm surges of up to 20 feet and warned they could be particularly catastrophic and unsurvivable. Hillsborough County Fire Rescue Public Information Officer Danny Alvarez had a message to those who defied Florida's evacuation orders.
You know, if you decided to hunker down and now you're having issues, please, let's learn from this.
At least 3 deaths have been reported. The indictment against New York City Mayor Eric Adams contained 5 charges alleging that the Democrats solicited and accepted bribes or illegal campaign contributions from wealthy Turkish donors in return for various favors. Adams says, quote, "We are not surprised," and that he will continue as New York's mayor.
I ask New Yorkers to wait to hear our defense before making any judgments.
Adams has a court appearance scheduled for later today. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Tom, David, John.
And Michael Barr, thanks so much for that summary of the poll. With us now, David Gura, host of The Big Take, helping us this week, helping all of Bloomberg with his political skills. David Gura, I want to get to the calendar right now. November 5 is the election. 6 is a Wednesday with no sleep. Thursday is the 7th. We're supposed to move on to other things. We won't. Friday's the 8th. And Saturday, the 9th and the 10th screams like Bush v. Gore. I got Michael Purvis with a brilliant note this morning. And Michael Purvis at Taleb and just goes right to it. A Slim Harris win may be more problematic than a blue sweep. Are people like you preparing for the Wednesday, Thursday, Friday after the first Tuesday of November?
I've cleared my calendar in case you and I have to come back here to do the show over the weekend, as we've done during Big News in the past. But yes, I think so. You know, we talk a lot about divided government in Washington, but this is a scenario that Michael is talking about that I think is a really important one, and that is if it's one state that determines this, there's going to be an effort to count ballots once again. It's going to drag out. It's going to be super attenuated. And there's going to be this legal fight. And in that vacuum, I think is going to be a lot of uncertainty, obviously, and perhaps a lot of unrest and difficulty.
I know you're briefing John Lemire this morning over at MSNBC, but the summary here, as you digest this poll, which state is your focus state out of, as Greg Corti says, 6,100 sample size? It's a legit mathematical poll.
Well, let's look at the two extremes here. Nevada jumps out, where Vice President Harris is up by 7 percentage points. I mean, that's pretty astonishing and sort of out of the mode that we've seen with a lot of other polls focusing on these swing states. But then looking at Georgia, where it's essentially neck and neck. No candidate has an edge there, and we've seen these candidates in Georgia a lot in recent days, and they're going to be there even more going forward. But the broad takeaway about the economy is what stands out the most. Joe Biden had a real big problem on his hands in terms of perception from the electorate about how he was handling the economy and would. Vice President Harris becomes the candidate. She has narrowed that gap. It was a six percentage point lead by Donald Trump in the last time we did this poll in August. Now it's 4. So she's making inroads there, and that's a huge advantage for her if these are reflecting accurately what's going on.
My shock of the week was we had a wonderful academic, esteemed, unbiased, I would say, as that can go, who said the undecideds are 3%. I was shocked by that statistic. I've also seen 6%. How big is the Gura undecideds?
I think that we're talking about tens of thousands, maybe hundreds of thousands of people across this country, and one wonders what they're waiting for, what's going to sway them. But rest assured, both of these campaigns are targeting them very seriously with advertising, with events, with speeches. They're hotly contested, of course, and as you say, quoting Greg Corti, it's not states we should be talking about here, but districts in particular.
We're down to districts and counties.
Yes.
Pittsburgh versus Philadelphia.
There you go. Yes. Omaha. Yes. Yeah.
Okay. David Gura, thank you so much.
But I'll see you that week, and I think that this is going to, it won't be election night, it'll be an election week.
This poll is legit. There was some real effort put into it to take it away from short, quick thoughts. There's some great charts in the poll about the dynamics as well. We'll get that out to you on LinkedIn and on Twitter today. Futures at -7 from New York City, Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the newsroom of this Bloomberg Business Flash, being brought to you by BAM Mutual. Insures municipal bonds that finance essential infrastructure and provides guaranteed income. To improve any portfolio, be part of building America. Invest in BAM insured bonds. After another record close with the S&P 500 stock futures this morning, little change. And as the quarter is about to come to a close, the S&P 500 year-to-date up over 20%. The Federal Reserve's preferred inflation indicator that's coming out this morning. Most active pre-market NVIDIA shares, they are lower. ARM Holdings getting snubbed. They went to Intel about potentially buying the chipmaker's product division. They were told it's not for sale. And then Costco Wholesale posting higher than expected profit. Lower prices fueling consumer spending. And the store traffic, they're also jumping. Dow futures right now down 25. The S&P E-mini futures 6 points lower than NASDAQ futures right now. They are 40 points lower. 2-year yield a basis point lower, 361. The 10-year down a basis point, that's 378. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. Here's your Bloomberg Business Flash. Tom.
John Tucker, thanks so much. 9 o'clock hour, Nassim Taleb with us. And we're going to just real good cross-section, equities, bonds, currencies, commodities to get you ready for the weekend here. And I should say, to Q4. OMG. Q4. Okay, here's the way it works. She was 12 years old, out of Edinburgh and LSE. And over 10 years ago, the world stopped as Charles Dumas, Diana Choileva, and Freya Beamish did original street research on China that stopped the Wall Street world. Freya Beamish, absolutely definitive on China. Chief economist T.S. Lombard joins us. Freya, I'm so happy to have you, and you absolutely nail with your first chart the reality. M1, there is a deflationary tendency. It's got some momentum, and you're looking for nominal GDP to fall off a cliff. Did China do enough in the last 72 hours to help nominal GDP not plunge like M1?
I think the nominal outlook in the next kind of 6 to 9 months is pretty baked in. There are a lot of distortions going on because they've changed the regulations, and it's been really hard to actually work out what's going on in M1. But my best guess is it's grim. It may not be as grim as the overall numbers suggest, but it is grim. And that's kind of, we can triangulate that with other data, looking at kind of wage costs are at their nearly at their COVID lows, their standard deviation below the previous averages. Profits on the industrial profits numbers, looking at operating profits, they're not doing well at all. So we published this note last week saying this is all looking pretty grim, and we think they're probably going to have to do a bank recapitalization over the next kind of 6 to 9 months. We didn't think that was going to come through this week, but I'm really pleased that it has. So the difference between last week and this week in my mood with regards to China is really quite big.
Freya, Aaron Friedberg at Princeton says, look, it's a Marxist-Leninist regime. Whatever the regime is Beijing, what do they need to do more to jumpstart the real back to 5%, or even to keep nominal GDP out of the tank?
It's never going to be an economy like the US. That we can say that from the get-go. They're never going to have properly private consumption-led growth, and that's because they're not willing to let go of the geopolitical and political aims of having supply-led growth, which decreases returns, and therefore you don't get the return on investment for the household sector to be able to drive private consumption-led growth. But there's a long way between being a US-type economy and what we were predicting in the continuation of the hole that they were digging until this week. And that there's enough in the difference between those two scenarios for a serious rally, and that seems to be what we're seeing here. We've always said we want two things out of China. We want them to recapitalize the banking system properly, and we want them to allow for redirection of income to the household sector. We've said that's not going to happen in terms of returns on wealth, but they do seem to be addressing, as you and I have talked about a lot, they do seem to be finally addressing moving towards the consumer. And that is a shift towards more demand-led growth and away from this supply-led growth that's so deflationary.
David, jump in.
Could you speak to the extraordinariness of what we have seen over the course of this week? Tom mentioning this has been a wild 72 hours, and you talk about sort of what's changed between last week and this. I guess I'm curious if you think the PBOC is done here when it comes to both monetary and fiscal stimulus, if this project has reached its conclusion, or if there's more to come, and if you could just kind of situate it in terms of how they're approaching the economy at this point. How much of a surprise was it, and is it something that we're like to see emulated going forward?
I think it's a surprise that it came this early. As I said, we just published that note last week saying that we thought they were going to have to do a bank recapitalization. I'm actually really kind of excited that it has come this quickly, because that signals that they've met their pain threshold even at this stage, and they're willing to actually change things, redirecting policy from what was this kind of jumbled mix of conflicting policies back towards demand. And that is, I think, a positive signal. It's not enough what they've done so far. So if we look at the kind of the rumors, and we still don't have things properly nailed down in terms of the total numbers, but it looks like they're going to do kind of 1 trillion facing the renminbi, trying to shore up local government debt. They might do another 1 trillion of recaps, bank recaps, which I love. If you put that together, it's probably, at a pinch, that's about half of what I'd like to see them doing, and just using kind of, say, TARP as a blueprint here of how much we would want them to do.
How should we
TARP
think?
was about kind of.
Yeah. Well, just to interrupt, we've talked a lot over the course of the week about this put that they've put in place and sort of what that's meant for the market domestically, but what it'll mean internationally as well. Could you just speak to that? We've seen some days in which this has kind of rippled around the world, others where it seems like it hasn't had the kind of ripple effect through Western markets that it might. Help us understand the magnitude of that put in the decision to do that.
Yeah, I think we've got at both poles of the global economy. We've got the Fed saying we want to be ahead of the curve, and we've got the PBOC saying, yeah, we want to get in on this as well. And more importantly, in the Chinese context, we've got the fiscal authorities coming in as well. From the PBOC's perspective, so much of this is just pushing on a string, that this is an over-leveraged country. They cut interest rates. You don't get that much response. I think perhaps with the PBOC's efforts to stimulate the equity market, I would maybe set a little bit more store by that. It's not an outright QE, because you're still reliant on the financial institutions and the corporations to go out there and buy the stocks. But there is a very powerful moral suasion in the Chinese context, in the sense that CEOs want to virtue signal so that their sectors get the policy favoritism going forwards, and there are very serious consequences to not towing the line if you're a CEO in China.
Freya,
there is a moral suasion argument there too.
I got 30 seconds. I got to get this in. It's off YouTube live chat. Freya Beamish, just as simple as I can, will this jumpstart FDI back into China?
I'm not sure I'd yet go as far as that. I think we're seeing about kind of half of what we need to see to really get positive here. We might see some positivity in the equity market. And I think kind of looking towards the major reforms that we want to see, these are really good steps in the right direction. Okay.
Freya, just fabulous. Thank you so much for the brief. She's with T.S. Lombard in London. Freya Beamish joining us today on China. And to Michael Purvis's note, whoever wins the election is a huge determinant, I guess, of how we bounce off China, how we bounce off Beijing, David Gura.
And what that relationship looks like. And of course, we've heard a lot of proposals floated about how big tariffs might be, how broad and sweeping they might be if Donald Trump were to win. We've seen the way that the Biden administration has approached China more competitively, but trying to establish communications that had lapsed during the Trump administration. So you're right. I think it's going to shape in a huge way this paramount relationship.
What happens today in the dash to November 5th? Is there a date calendar for today or the weekend?
Yeah. So we
did they both go to the Giants-Cowboys game last night?
Oh, by the way, I got my ballot in the mail.
Did you?
Early ballot.
Oh, very
yes,
good.
it has
You have to
arrived.
send it in or hand it in? How does that work? You'll mail it in.
After you Xerox.
I got to open it.
Yeah. After you
gotta open it
Xerox 50
first.
copies.
It's New Jersey. Do we count?
Yeah, right. I know that President Biden is going to Scranton today for an event, and Vice President Harris, I think, is making her way through the Midwest as well. So travel continues at a relentless pace. And I know that the big event for the former president, he's going back to Butler, Pennsylvania, where that assassination attempt was for a rally next weekend.
We are ready for November. We had our first meetings here on scheduling out tight from November 4th, Monday, out through the next weekend. David Gura and I have cleared our schedules, as they say. It's very interesting. On economics, finance, investment, international relations, and this election, Bloomberg Surveillance. Stay with us.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. After the 42nd close for the S&P 500, record close. Futures this morning lower to little changes. The prices for the stuff at Costco, they were lower, so that attracted more shoppers, but the warehouse club chain reporting a narrow miss on revenue estimates.
Lisa Mateo's fault.
I go in there for the 5-gallon bucket of peeled garlic, which is really a buy. Bloomberg Economics says August personal income and outlays data, that's going to validate the Fed's decision earlier this month to cut rates by 50 basis points. We're going to get more data this morning. There was so much trading on the Shanghai Stock Exchange, it ran into a bunch of glitches. After the Chinese government, of course, they added more stimulus. CSI 300 soaring 4.5%. It's been the biggest weekly rally for Chinese stocks in 16 years. Right now, the Dow futures 7 points lower. The S&P futures down 3. The Nasdaq futures right now down just about 27 points. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. David and Tom.
John Tucker, thanks so much. Okay, worst screw up of the year. Let's go right there right now. Rob Sharps, chair of the board, chief executive officer, president of T. Rowe Price, they announced their mega foundational deal with the Baltimore Orioles, and they sent Sebastian Page to make the announcement. Do you have, from South Africa, and Sebastian, honored to have you here on allocation. When you see the Orioles, which is one of America's great teams this year, and T. Rowe Price branding it, here there's a patch on the uniform and the whole thing. Do you have any idea what's going on?
You know, what's going on, Tom, is you have our global headquarters in Baltimore, and we're attached to Maryland, and a really good partnership with the Orioles, and we're really excited about it.
It's really exciting. I mean, I look at all the branding that's out there, and it's maybe the best branding I've seen. It's nobody wants to brand the
I saw
Boston
David
Red
Rubenstein at one of these games with a hose, and there's a section where you spray fans with a hose, and he seemed to be really enjoying that in a way
He told me, Mr. We thank Mr. Rubenstein for his commitment to Bloomberg Surveillance. He said to me, Tom, this is a lot more work than I thought.
I believe it.
Sebastian Page with T. Rowe Price, venerable of Baltimore, with us. Are you using the playbook that T. Rowe Price would have used 20 years ago or 40 years ago or 60 years ago in this cacophony we're in?
You know, the lifeblood of an active manager is research. So that playbook, massive investment in research, following companies, but also top-down asset allocation research, which I'm responsible for, is core to the process, and that's what we're doing, and that's our playbook, if you will. Now, Tom, if you mean, you know, the genesis or the early days of the company around growth stocks, if we like growth stocks in our asset allocation portfolios, we're actually slightly overweight value right now.
How did your world change, if at all, as a result of what happened with the Fed last week, this long build that we had to the Fed beginning this cycle of rate cuts? How does that sort of reshape your perspective? And we talked a lot about what was baked in and what was expected, and perhaps we can set magnitude of those cuts aside, but what changed as a result of what happened last week?
So going into this, we're neutral between stocks and bonds. After the 50 basis point cut, we're neutral between stocks and bonds, or close to neutral, but we're having massive debates because several members of our asset allocation committee want to start adding to stocks. You know, someone told me recently I was being too long-winded, so I figured out how to make the bull case in 4 words. So if you're with me on this,
okay, yeah.
The bull case in 4 words: rates down, earnings up. So it's straightforward, pragmatic for the bulls. The problem is this is all priced in. The economy is going to be okay, but you have a price-earnings ratio of 21 on the S&P 500. The S&P is up 60% over the last 2 years. This is not really where we want to add too much to stocks.
The economy is going to be okay, and yet we pick up on kind of the palpable anxiety, I think, from policymakers as they look at the unemployment rate in particular, look at the job market more broadly. Is that misplaced or unfounded? And we talk about sort of how it's meeting by meeting, everything is data-driven. There are skeptics who say it's data point by data point driven. How much of that anxiety is merited? How much are you thinking about the potential for there to be a deeper downturn than we've seen?
it's super hard to make a recession forecast right now. If I look at three factors, manufacturing PMIs, which it's an old school indicator, but it's at 47, the yield curve, which we talk a lot about in the financial media, and the increase in unemployment, I can run the statistical model that shows a 92% probability of recession. Now, I can turn that on the dime if I add the level of unemployment, which 4.2 by historical standards is low. It's a robust economy. And if I add any sort of market pricing, spreads or stock returns, that probability goes down to 11%. So we're kind of a knife's edge on the macro data right now.
I've said this before, folks. It's old news. Fortunately, some of the movie rights came to me. Beyond diversification, what every investor needs to know about asset allocation is, without question, the most intelligent book of what not to do in asset allocation by Sebastian Page. Chapter 11, we've got Nassim Taleb coming in today in the 9 hour. Fat tails and something about the number of particles in the universe. I'm going to take that and say everybody's got too much information. Now, how do we keep it simple to succeed out 3 years?
I'm really excited that you have Taleb coming in. I talk about his research in the book, his points of views. This idea of the number of particles in the universe is that Taleb doesn't like the normal distribution, the so-called standard statistical models. And if you look at probabilities of, say, 30% loss on the stock market, or what we just had with Japan, 20% in a couple days. If you look at the statistical standard probabilities of those events, it should basically almost never happen. It's like once in a gazillion years, once in the number of particles in the universe number of years. But in reality, those events are more frequent than we think. So maybe this dovetails with Taleb coming in,
I think
but it's hugely important.
It's hugely, Fooled by Randomness, folks, which is where Taleb got his start. He was a lowly trader doing nothing before Fooled by Randomness. And the answer in there is, if you take a blended, all-in statistical, simple bell curve Gaussian distribution, that doesn't give you a picture of where we are. So what is the model you use now, given we have a lifetime crisis every 7 years, or a China turnaround?
And to be fair, Tom, this is something professional investors know about, have known about for decades. But still, how we do risk management as an industry has to continue to evolve, and the soul searching on those more frequent than expected losses or black swan events still needs to be handled through thoughtful scenario analysis. This is where scenario analysis really comes in, and it's something I argue in the book. Bring scenario analysis to the front office, where you're actually deciding how to allocate assets, not after the fact, once you've made your decision.
This is Fooled by Randomness. The trader who gets his head handed to him is like 15 floors below, and nobody cares. It's like David, you're home watching Industry, so you can do this show, right?
Right, exactly. That's how I prepare.
British trading and all that. Sebastian Page could be out of Industry. I mean, he could be out of central casting there.
Do you get a sense that you don't have to pull back the curtain at T. Rowe Price, but that conversation is happening, that risk analysis, that the way that we approach it is changing, or that there's an openness to changing? And if not, what's the hurdle to getting there, to having a more comprehensive and kind of concrete conversation about what it should look like?
The importance of scenario analysis, rather than things like Sharpe ratios that take the volatility as the measure of risk. Scenario analysis in different ways. You can just go back and look at crashes and say, what if this happened today given how my portfolio's positioned? But you also have to think about it. And we have investors talking with risk managers saying, what would happen if? This is never perfect. But you start shocking the factors.
We're going to end this, unfortunately, Sebastian. We should have you on every day. I mean, from the Orioles dugout, the T. Rowe Price dugout at Camden.
I'd love to.
Do you know who Cal Ripken is?
I do.
Yes. Okay. Well, there's
Tom, I tried to get you tickets to the Orioles. My compliance even...
Orioles, White Sox. Thank you, Sebastian.
Yes. We'll work on that.
Very quickly here. Are we over-diversified, over-allocated, thinking too hard about our 401ks?
It feels that way if you look at the performance of U.S. large cap tech companies. If you look forward, I think it's prudent to have a broader allocation.
Okay, Sebastian Page, thank you so much. Greatly appreciated today. And again, I can't say enough about his book. Look for the movie. It's 4th of July, I think, 2026. DiCaprio's involved. Beyond diversification, what every investor needs to know about asset allocation. Can't say enough. In English, incredibly intelligent book about what not to do in the market. Right now, right on the screen, small caps giving me some love. Futures -3, just sort of a pause. The VIX 15.58 critically, and the good markets nudging up, as Jess Menton said, record highs here, record highs there. You know what? The VIX really hasn't moved, 15.58. With our news in New York City, Michael Barr.
Thank you very much, Tom, David, and John. The results of our latest Bloomberg News Morning Consult polls show Kamala Harris has trimmed Donald Trump's advantage when it comes to the number one issue in the race, the economy. Bloomberg's Amy Morris has the details.
This poll focused on swing states, showing Harris now leading among likely voters by 7 percentage points in Nevada, 5 points in Pennsylvania, 3 in Arizona, Michigan, and Wisconsin, 2 points in North Carolina, and in Georgia, they're even. Her leads are within the poll's statistical margin of error. Now, across the 7 states, Harris is ahead by 3 percentage points among likely voters. That's a statistically significant lead that's about 2 points greater than last month. The poll underscores that this contest could be decided by the narrowest of margins or come down to a single state in the Electoral College. In Washington, Amy Morris, Bloomberg Radio.
Hurricane Helene has weakened to a tropical storm over Georgia. Helene slammed into Florida's Big Bend region as a Category 4 hurricane. Tampa Mayor Jane Gaster says they still need to start their full assessment of damage to the area, but from what she has seen, there is definitely a significant amount of parts in the city.
Throughout our downtown area, I was just driving down there, and there's a great deal of damage from the flooding. Barricades moved, construction trailers moved, and those were just the things that I saw in a very short drive.
At least 3 deaths have been reported. New York City Mayor Eric Adams could make his initial court appearance on charges that he accepted illegal campaign contributions and free overseas trips from people looking to buy his influence in city government. Adams' lawyer, Alex Spira.
There's no corruption. This is not a real case. We're going to see everybody in court.
Adams is scheduled to appear at noon today before a magistrate judge. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. More with Tom, David, and John.
Michael Barr, thanks so much. Got to get back here to this poll as well. We didn't talk about Pennsylvania last time. If I'm Harris, if I'm Trump, am I heading for Philadelphia or Pittsburgh?
They're spending a lot of time in Pittsburgh, and I think that's where they're going to continue to go. And obviously, Vice President Harris there this week for this big speech on the economy, the unveiling of her 80-plus page plan for the economy as well. But as I said, you're going to have former President Trump going back to Butler, Pennsylvania, also near Pittsburgh, a little later next week. So I think that's where the magnet is drawing them at this point in the race.
That's the undecideds, I guess, as well. On your North Carolina, you did a nice summary, David, for us there yesterday. Does this poll that we did, 6,100 people, does it change your view on the triangle state? I like how you did that, John.
I like that. I know it'll be close. So you have Vice President Harris here up by 2 percentage points in this latest Bloomberg Morning Consult poll. I think that will engender some optimism, more optimism. It's within the margin of error. But I think that there
is the margin of error.
It varies state by state in this poll. I believe that it's 2 or 3 in North Carolina.
No, I meant Duke, North Carolina.
Oh, sorry.
What's the margin of error?
I'll double check that. I know that the Tar Heels have a bit of a hill to climb on Saturday. We'll see. Is Sweeney going to be there? Have we confirmed that?
I don't know. He has the golf stream.
Yeah.
I know he's got the golf stream.
See if he's wearing the Duke tie.
So they both need to be in North Carolina now. We got to talk about this more. There's a lot going on here.
Yeah.
But they got to be in North Carolina.
That's right.
It's that close.
Yeah, for sure. And it's a state that went for Obama, then went for Trump. We'll see what happens. Trump and Biden. We'll see what happens next time around.
David Gura, giving his perspective. Sebastian Page was so good. Gura was reallocating his 401k as Michael Barr was doing the news. Futures at -3. The bond market churning, quiet. Big inflation numbers in 45 minutes.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. A little later this morning, we're going to get the latest data. In fact, it's the Fed's preferred inflation gauge. Ahead of that, futures, a little change right now. The S&P 500 did notch its 42nd closing high yesterday. And right now, chipmaker NVIDIA, that is most active in the pre-market. Those shares, they're down about 0.6%. A number of quantitative hedge funds in China, they were hit severely today as the nation stages biggest rally, the stock market there in years. And the CSI 300 index rallying 4.5% in Shanghai, wrapping up the best week since 2008. Commodities, gold heading for the third weekly gain. And this morning you have oil looking like it's steadying after a sharp two-day drop, with prices still on course for a substantial weekly decline. The refined product, by the way, well under $3 a barrel on the home front. Dow futures right now $3, 3 points lower. The S&P futures right now down 2 points, and the Nasdaq futures 14.5 points lower in the pre-market. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. David, Tom.
Surveillance correspondent, congestion correspondent, John Tucker. So what are you playing at the Wawa?
I think it was like 280 something.
Thank you in Houston. Got a great phone call from Houston, email rather, from Houston, saying they're down under 270 in Houston. I mean, it's like...
Now, remember, those signs, they change automatically. They're all electric now. They're like billboards.
You don't have to
down
go
the
the
highway.
ladder.
They say inflation and prices are coming down, voter. I mean, that's my perspective.
Do you pay with all cash for the discount?
A lot
Sometimes,
do have the cash discount. No, I go with the card, so...
Get those points.
Thank you for that report.
We can go deep on this.
Congestion correspondent John Tucker, the Midtown congestion this week is his fault. Our daily look at what we do here at Bloomberg Surveillance, and is brought to you by Interactive Brokers Portfolio Analyst. Consolidate and analyze all your financial accounts on one powerful dashboard for free. Sign up for Portfolio Analyst. Do it at ibkr.com/free PA. ibkr.com/free PA. Interactive Brokers, thank you for foundational support. Ann Maletti joins right now, I guess, on value investing from Allspring Global Investments, head of active equity. I'm just going to cut to the chase. Is Apple a value stock?
I guess it depends on who's looking at it. I would say at this point, you know, and look, I've always gone with the Buffett definition of values, more what you get versus what you pay. And investors have been rewarded for owning Apple because they've delivered.
Right.
You know, the question is, can they continue to do that?
So if you're framing out with a bunch of young Turks at Allspring, your terminal value, how far out is your view on richly priced Mag 7 and other stocks? Do you now at Allspring have to frame out 3 years, or dare I say, do you go out to a 5-year analysis?
You know, I think the most interesting thing about technology, and look, everybody has to look at it, whether you're a value investor or a growth investor, because it's such an important piece. You know, it's 30+% of the market cap of the S&P 500. And we have a new innovation wave coming, AI and other things. The most important thing, though, that I'm hearing from our portfolio managers is the fact that those Mag 7 stocks, although there's been a lot of growth coming, there's a broader area of focus, and looking further and deeper into technology, into places where, you know, it's going to travel next, and where investors are likely going to give higher multiples next is where we're paying more attention. That's more interesting than kind of paying up for the multiples on some of the Mag 7 stocks.
It seems like small caps and mid caps are having a moment, I guess, to be anticipated after what happened with the Fed.
Yeah.
Talk a bit about that, and you know, we had a great conversation this week about concentration risk, picking up on what you were saying just a moment ago about how long we've seen these 7 stocks, now 5 stocks, dominating everything. As the aperture widens, what stands out to you beyond those mega caps?
Yeah, I mean, look, we've thought since the beginning of the year we'd start to see this broadening. We have, but it's it's kind of been based on the fundamentals, looking more at where earnings could come from next. If you start to see a deceleration in some of those 5 to 7 names in growth, look, they'll still have nice growth, but it will be decelerating at some point. Where will you see the opposite happen? And sectors like healthcare stood out, sectors like financials, some of the more value-centered areas of the market. And we're certainly starting to see that happen.
Well, let's go to financials. I mean, I'll be honest, I'm not up to speed on it, other than there's a lot of talk about right-sizing, cost expense, and that. I mean, I saw Brian Moynihan meeting with the Prime Minister of the United Kingdom as they look at European expansion and all that. Are you enthused by the big banks?
I mean, I think the big banks have been kind of the easier play and the safest place to go, just given the uncertainty about the economy going forward. Our PMs have also liked some of the insurers and other financials that are out there, and that's been the primary focus. I think, the economy will be kind of a driver of what happens with the regional banks and other places as you look deeper.
This has been a crazy week in many ways. Certainly when we get in here every morning and see what's happening in China, that we've kind of agitated us, had us rip up the script, as Tom would say. Yet we haven't seen this kind of uptick in volatility this week or in weeks past, and I wonder what you make of that, given what fear still exists about the path forward for the economy, for markets. Why aren't things more volatile, do you think?
It's interesting because I've actually been in the camp that volatility would kind of stay around and stick around until at least year end, until at least we have an answer on the election. I also live in a swing state, right? So I'm constantly living in it. Yeah. But as I kind of step back from the emotion, what I'm also seeing is the market reacting to the fact that maybe the Fed put is back. And so rather than the markets responding to just good economic data being good news, it's kind of looking at, bad news as good news again, too, which is a little unnerving to me.
Yeah. Is cash an Millennium investment now?
I mean, look, our money markets have done well along with the rest of the industry, but our fixed income team has done incredibly well, and we are saying to investors, much like, I think a lot of people on your show are saying it's time to look out in duration and extend that duration.
I look at the game right now, and it's sort of a catch-up here. Are we underweight Mag 7 and the other giant stocks because our portfolio constraints? Is it like an industry issue for active management?
I think, to your point, Tom, the mutual funds, that vehicle in particular is restricted. If you're going to be a diversified fund, you can't be as concentrated as an index. That's made the headwinds stronger for active managers. I would say, though, it shouldn't be a headwind for much longer. And rather than looking at it as as kind of a problem, I look at it as an opportunity. If you've been a straight index investor, you've taken on a lot more risk than I think most investors understand.
Our conversation with Michael Mauboussin sticking with you, clearly. I mean, he talked a lot about this.
I got to go read Mauboussin, this weekend. I mean, I started in 1997. There's some guy out there that has all his publications.
You're like getting them bound.
And
you're taking them
everybody
to the bookshop
has Anne Miletti's letters, back to when she started in the industry in 1995. And you just look, you just study. And the rules are the same.
Yeah.
But what we heard from Sebastian Page, I'm just death. I mean, Sharp I'll go with because there's no beta within it. But Jensen Trainer analysis, I'm sorry, and I can't do beta analysis. It's baloney.
It's not my strength.
Tushar Shande, MIT, he got it right. There's too much of this. I mean, Sebastian, I thought was great in this. This is what surveillance is about, folks. To talk to Sebastian Page at T. Rowe Price and then Anne Miletti at Allspring. This is what we do. Nassim Taleb in the 9 o'clock hour as well. We're going to try to get through Friday. How about that traffic, David Gura?
Well, I had to stop in Manhattan on the way here today, and in so doing, I had the trouble that you've been describing, just getting a car. Take me here.
Our theme for our songs today is traffic. Okay, we're going to do that. That means Stevie Winwood. This is a co-write. Stevie Winwood with a guy we lost this September, Will Jennings, America's greatest modern songwriter. Stevie Winwood.
Now she can't be that one
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
We're addicted to the parlor game, the Fed, the monetary ballet.
Where do you see opportunities in a fixed income space here in 24?
With Lisa Mateo on markets.
AI affecting demand for cloud computing.
And Michael Barr with news.
Another legal setback for Donald Trump, this time across the pond.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Michael Barr, Lisa Mateo. Lisa Mateo out. John Tucker in, attempting to do the Mateo Act. We'll have a Bloomberg Business Flash here in a moment. Paul Sweeney on sabbatical and believed on the Gulfstream down to Duke. Where is it at Duke?
It's
or
taking
UNC?
place at
Do
Duke,
they use
yes.
the same stadium like Meadowlands?
No, they each have their own, and UNC's is larger, I should say. But
very
Wallace Wade
good.
Stadium
Sweeney didn't
in Durham
mention
has its
it to
own
me.
particular flavor, and it is older and smaller, better seats for most viewers. Of the
So
game,
better seats and no doubt smarter
easy
seats.
egress for Paul
So
if he needs to step out.
If Mr. Rubenstein is listening today,
Yes,
I mean,
he a proud alumnus,
What do you
of course,
think?
of Duke.
110,000 stadium there, the Rubenstein Stadium.
He at Duke has put a lot of money into the library, and it is the Rubenstein Library. It's a beautiful building that he has refurbished and remade.
Committed.
So, yes.
Okay.
And it pains me, as somebody who grew up in Chapel Hill, to say so, but it is a beautiful campus.
Thank you for that summary. Good tidings there. Jess Menton can't concentrate today. Arkansas, Texas, A&M. Bloomberg Surveillance today brought to you by Cohn Resnick Advisory Assurance Tax. Discover game-changing strategies to maximize value, optimize performance, and manage risk. Put your business at the forefront. And thank you, Cohn Resnick, for your commitment to the show. It's Friday. We're trying to get to the weekend, except we got a small matter in 27 minutes, the inflation statistic that Mr. Powell is concerned by. So we'll give you full coverage of that as well. From the Interactive Broker Studios with our Bloomberg Business Flash, John Tucker.
All right, futures ahead of that. Kind of mixed right now. After the S&P 500 hit its 42nd closing high this year. Traders are looking for the Fed's preferred inflation indicator. Again, that comes out, 28 minutes for clues on the trajectory of rates after economic growth was revised higher yesterday. Costco shares edging lower, falling in pre-market trading after the Warehouse Club chain reported a narrow miss on revenue estimates. Right now, the most active pre-market that belongs to NVIDIA, those shares right now, they are down 0.5%. China, the CSI 300 index rallying 4.5%, wrapping up its best week since 2008. And here's one, not sure what impact this is going to have if it takes place. Anyway, the world's top container carrier, it's MSC Mediterranean Shipping, they're urging customers to move U.S. cargo through East and Gulf Coast ports before the plans start on Tuesday of a dock worker strike that's possible. Not looking good right now, so this threatens to paralyze as much as half of the nation's seaborne trade volume. So who knows?
Well, thank you to all that have emailed me on this, particularly out in YouTube live chat. This has been a real source of conversation. I mean, it's not a small matter.
I mean, we're going back to like all those supply chain problems potentially.
I don't know.
Back to the pandemic.
But it's like real. And, it'll be interesting just to get to Tuesday will be interesting. This is a joy. David Gura wants to ask Christina Hooper about economic questions. I just want to go to the moment. Right now, people in every school with kids who are 17 and 18 is in a total lather about college planning. You are the definitive liberal arts major from Wellesley College. Good morning, 92.9 FM from Mount Katahdin down to Block Island. How did you get from liberal arts English history at Wellesley College to the grind at Invesco? How did that happen?
Well, first I'll say it's not a grind, but what I did do was realize that while I had a wonderful education, I needed some practical components to it. That took me to law school, which wasn't actually that practical, a lot more philosophical, and then business school, and then a master's.
That's great.
Yep.
But the liberal arts education still has value. That's where I am.
Absolutely. My daughter's a first year at Vassar and is doing the liberal arts thing herself.
Is she taking a foreign language?
That's a good question. I think
You don't know.
I think she has to, but I'm not sure she started. And of course, I have a son who just graduated from Georgetown last year. He was very much in the liberal arts sphere and
Right.
is now embarking on a career in entertainment,
right.
which means that he's a part-time barista
So
for now.
he's a part-time barista.
For now. There was a
For now.
September 28th. Can you get me October? Not that I would know anything about that. Good morning, Paris. David, save us.
Lovely to see you. I saw in your latest note the mea culpa at the top, you among those who didn't think that the Fed would go as big as it did at the last meeting. So it has. What does that say to you about the path forward for them, and help us just understand the magnitude of that move as we look forward here?
Well, I was worried that it would signal the wrong thing because
Panic.
right, exactly, because of when we've had crisis cuts in the past, or 50 basis point cuts, they have been crisis cuts in recent past. And having said that, though, I think Jay Powell did a very good job in the press conference, and FOMC members subsequent to that have done a great job arguing that this is a preemptive cut to keep things the way they want them to be and the way they are, and that the economy is still on solid footing. I think it's critical to get that message because that's the most important question on investors' minds right now.
We talk so often about the long and variable lags, to lean on that trope and that famous quotation. Here they're doing this preemptively. Do they have a sense of how much of this is art versus science? So they want to keep things the way that they are. How much confidence do you think they have that this is going to do that for them?
I think they're fairly confident. I think we have to recognize there is a pretty significant psychological component to all this. And so they're doing everything they can to stack the deck by encouraging confidence. It's really not that different than Chinese policymakers right now, right? I mean,
There's the headline.
There you go. It's the same thing. Right. It's the and I do think there's a lot of data to support it. I mean, even if we go to consumer confidence on Tuesday, there was a lot of I would say, an outsized reaction, right?
Yeah.
But if you actually look into the details, consumers are down on the economy. It's dropped significantly in their view of it. But at the same time, they still want to spend. They want to go out to eat. They want to go to the movies. So I think of it as the Eeyore economy.
Christina Hooper, you are hardwired optimism on the American economic experiment, and even take it over to the political experiment, which is maybe tangential to what you're doing at Invesco. The number one wrong of the last 18 months was the gloom on recession. You didn't call that. Why did so many people get so wrong the recession call?
It was hard to imagine an economy holding up as well as it did, given how aggressive the tightening cycle was. And so I understand why there was so much gloom. But what I looked at was things like the fact that about 92% of outstanding mortgages are long-term fixed-rate mortgages. So the transmission mechanism, and the average mortgage rate was about 3.62%. So the transmission mechanism just wasn't as powerful in the U.S. as we saw in other economies that went through the same thing.
When you, I mean, I don't know if people are doing postmortems yet on how this has happened. I guess Jackson Hole, we got a taste of that as central bankers gathered to take stock of the fact that, lo, there hasn't been a recession. How much of that do you attribute to luck, to the uniqueness of the moment? What's the lesson from what's happened here over these last few years in terms of the policy approach that we could carry over to future, God forbid we have another pandemic, but future to major seismic events like that?
Well, I think a lot of it has to do with proactive policymakers. And what we saw in this crisis, and it really was a very significant one, was that policymakers were much faster to act and act decisively, provide significant stimulus. The kind of fiscal stimulus we saw in reaction to the pandemic was just so big compared to what we saw in reaction to the global financial crisis.
Is that because the tools now aren't novel? So going back to the global financial crisis, we were kind of pioneering new techniques. Now there was experience watching them being deployed in that last incident, knowing how they could work and knowing perhaps that they needed to go bigger. There was a need, a recognition of the fact that going bigger might help.
Well, I think some of it was learning from past mistakes, but I would argue that actually the bigger force for the economy was not the monetary stimulus, but it was the fiscal stimulus. Certainly it needs to go hand in hand, but it was just this very, very powerful fiscal stimulus that actually made it into the hands of consumers that made the difference.
You have a difference, which is within your strategy. You've got this bond colossal, debt colossal, loan colossal, senior loan colossal called Invesco, What are the pros on the fixed income side telling you about coupon right now?
Well, I think there's just a general excitement around fixed income and a view that we're almost in a golden era for fixed income, that we're going to see rates coming down, that the economy is not going to go into recession. And so you can find opportunity in high yield, high quality high yield, in municipals, in
She
credit.
sounds like the regional marketer for Kansas City. Christina, that's great that you got a great call. It's a golden age. And I love it. Sounds like a Casey Musgrave song. Christina Hooper, where's your terminal value on that? What the fixed income guys want to know is, are we going to an R star 2% lower? I doubt it. Higher. Where's your R star where fixed income's going to?
Well, it's probably in the high twos, but I think this is very much a moving target. So, it's certainly a valuable academic exploration, but we have to recognize that it may not be reality.
Okay, Christina Hooper, thank you so much, particularly on the liberal arts of Wellesley College and he's a barista?
Temporarily.
Yes, he's a part-time barista.
To make it work.
Yeah.
$250,000. May I help you? Christina Hooper, thank you so much with Invesco. Really a soft landing perspective there is we can. What am I looking at? Green on the screen. Hooper lifting the market. We are red on the screen now, up 2. We've got inflation data, key inflation data in 20 minutes. Well, I talked to Mike McKee. I got my briefing from Mike McKee. He says it is important, but it's a compendium of what CPI and PPI and EIO do.
Yes,
So,
I've been asking about this all week, but I wonder, given the new deeper focus on the labor market, obviously this matters, but not as much as it did.
I think that's great. You're trying to take my job? What are you doing here?
No.
That's good.
Please. I'm working as a barista half-time. Tom needs more coffee.
Bob, could you help
I got that message earlier.
Out of our expended. Be sure, she uses the railing off the jetscape and all that, Futures up 2, Dow futures up 23. Christina, thank you. Christina Hooper at Invesco. The VIX 15.46 this morning. With our news in New York City, Michael Barr.
Thank you very much, Tom, David, and John. Hurricane Helene has made landfall in northwestern Florida as a Category 4 storm, as forecasters warn of catastrophic flooding along the Gulf Coast. Helene came ashore last night in the Big Bend area of Florida. Helene has weakened to a tropical storm as it spins through Georgia and is extremely dangerous. Florida Governor Ron DeSantis.
When Floridians wake up, we're going to be waking up to a state where very likely there's been additional loss of life, and certainly there's going to be loss of property. You're going to have people that are going to lose their homes because of this storm.
Florida Emergency Management Director Kevin Guthrie.
If you are hearing trees snapping in your area, take immediate shelter. Go to an interior room away from windows and doors, most likely an interior bathroom. Close the doors and get as low as you possibly can.
Flash flood warnings extend far beyond the coast up into northern Georgia and western North Carolina. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Tom, David, and John.
Michael Barr, thanks so much. Thanks to CBS Sports for a nice compendium. Michael Barr with Helene, and this is not funny. It's like really serious. We may get Atlanta, New York Mets, a doubleheader on Monday, or even just one game. If it's needed, right?
Yes. If one game if it's needed, and then 2 if which brings up the point: how do you schedule that? Do you put one in the prime time, or what happens?
Well, we'll have to see. But again, safety. Rob Carolyn in the 9 o'clock hour from New York City, Bloomberg Surveillance.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom, with this Bloomberg Business Flash. Stock futures right now slightly higher as we wait for the Fed's preferred inflation measure. Bloomberg Economics expecting soft reading on core PCE inflation. That should kind of ease any concern about immediate upside risk to the rate of inflation. And consumer spending, they say, is likely to slow even as income growth remains robust. And as inflation cools, Costco shoppers, they're buying more. Costco wholesale posting higher than expected profit, but they also had a narrow miss on revenue estimates. ARM Holdings, they approached Intel about buying the chipmaker's product division, but they were told the unit is not for sale. And Bristol Myers Squibb, that is rising pre-market. They gained approval in the U.S. for the first new type of schizophrenia drug in 7 decades. And of course, this has opened a fresh avenue of treatment for millions with the mental disorder. Right now, Dow futures 27 points higher. S&P E-mini futures up 2. The NASDAQ futures, they are 9 points higher. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. David and Tom.
John Tucker, thanks so much. David Gura in for Paul Sweeney. I'm Tom Keene. We welcome you on a Friday, reading in through the weekend, trying to get to next week, trying to get to Q4. Ira Jersey scheduled to be with us here in about 6 minutes on an important inflation series. We'll move on there. Nassim Taleb with us in the 9 o'clock hour as well. Here's the dirty little secret. With heavyweights in research, like at Rabobank, Jane Foley, she publishes, and it's 7 pages. You start at the back. This is the pro secret of how you read a research report. Yes, like Cliff Notes. You figure out what Lear did right at the top.
You're not reading in reverse. That's what I thought. I thought you were
you're not reading in reverse. You just go back and see what Foley says about the FX market, and then her world blows up like we saw with China this week. Joining us now, Jane Foley, with a research note. You know, it's about what's going on, Swiss franc on the move in that. But Jane Foley, you get hit over the head by China monetary announcements and then China fiscal announcements. How did you respond to what you saw in China?
You know, I think this makes a really big change for many of the markets that I cover in G10. I mean, obviously, Germany, for instance, China has been Germany's biggest export partner for a number of years now. And so that should really boost European growth outlook through the German trade channel. But then, you know, look at Australia, look at New Zealand. Australia and New Zealand are the best performing G10 currencies over the last 5 days. And that is despite the fact that the RBA has perhaps become a little less hawkish. So, you know, China is seeping through, and this sort of optimism will have quite a big knock-on impact.
Well, Jane, cut to the chase, because John Tucker's got to, you know, he's got to make some money right now. Where's the big figure move on this China announcement?
I quite like the Aussie. So, for instance, even though I'm talking about the German trade channels providing a boost to the euro, we've had this week another bout of speculation about whether or not the ECB October meeting is really a live one. I mean, look at today's German and French CPI data. They're pretty soft, meaning that the official forward-looking or flash CPI estimate for the Eurozone next week is also probably going to be on the soft side. So if you look at the relative weakness of the German economy, maybe the French economy, if you look at the relative strength of the Euro trade-weighted index, well, you could put together an argument that says, you know, maybe October should be live for the ECB. And yet you look then at Australia, look at iron ore prices, again, pushing up. That's pretty good for the Australian fundamental backdrop, which,
so you're long Australia against who?
Against the euro. I think that's probably a pretty good bet. I think that's probably a decent bet right now. And you know, it'd be far more difficult right now to trade, say, Aussie New Zealand, because New Zealand's also going to get a big trading boost through that China demand channel, assuming, of course, that it does come.
I mean, David Gura, I've been here for like 6 years, and I've never brought up EUR-AUD.
Have you just
You
done
can
it?
do that
You
in
can
the
do it on the
Good
Bloomberg
morning,
terminal.
Tom Secunda. You can do this on the Bloomberg Professional Service. It's got big figures to move to strong Australia back in 2022. Like how I did that?
Beautifully done.
Nailed it.
Shameless
Okay,
plug.
here.
Jane, I wanted to ask you about Japan. We've talked about China. Let me move over a little bit eastward and ask you about what we've seen there. There's been a political story there. Obviously, it's been a central bank story as well. What are we seeing in the yen?
Well, we've got Ishiba now as the LDP head, likely, of course, to become the next prime minister. And the market's pretty relieved because I was up very early this morning and I was watching that yen, and the market was very nervous that he wouldn't win the runoff for that election, and that we would have somebody there. I can't say her name, unfortunately. I'm not great at pronouncing Japanese, but she was the candidate who the market thought would be criticizing the Bank of Japan for interest rate hikes. So the market's relieved she didn't win the runoff. Instead, we do have Ishiba, and the market thinks, great, he will come through with perhaps some fiscal stimulus for Japan, and also more likely to leave the Bank of Japan alone, and allowing the market to continue to think that there will be another interest rate hike, perhaps around the turn of the year. So, when we see the level in dollar yen creeping back to 145, and, we were pretty weak on the yen this morning, I do think that it's offering opportunities there. I do think that the yen will trend to firmer levels against the dollar over the next few months. And I think there's an awful lot of fundamental change happening in Japan, which, is behind what we're all talking about, which is just interest rate differentials.
We won't make Tom pronounce the Japanese name either, although I'm tempted to.
John Riding wanted me to learn Japanese.
Yeah?
I went down in flames. Absolutely down in flames.
Lasted a cup of coffee
I'm
before
shocked.
that could happen. Jane, we've focused so much in China over the course of the week, and I'm interested in you kind of dovetailing that with the Fed decision that we got last week. Sort of what the Fed's beginning of the Fed's rate cutting cycle has meant for these other central banks around the world. And obviously the Chinese case is a special one given the approach and how they've rolled out this many-day policy plan proposal. What changed with the Fed when you look at central banks more broadly, as you look at them kind of globally?
Well, I mean, for China as well, of course, they would like to have a firmer renminbi. So it sort of helps play into that sort of story, and perhaps, giving them a little bit more freedom to act potentially on the monetary policy side. But I think the question is, the Fed's gone 50. The Riksbank earlier this week went 25, but it said it could go 50 before the end of the year. The market was speculating that the S&B has gone 50. I would imagine that must have been a pretty close call for them, because inflation is pretty soft in Switzerland too. And Canada, of course, has indicated that it could use 50. So, the market's beginning to think, well, are we justifying, or are we justified in the state of these various economies, 50 basis points in incrementals? And I think the Fed has been a catalyst in that sort of discussion. Although, you could say, well, look, the Swedish economy is weaker than the US, and so is Canada. So maybe there's more fundamental adjustment needed, perhaps, in those other economies. But, it also suggests that risk appetite can potentially push higher for some other perhaps emerging markets. If you see the ECB coming down with rates, if the Fed's coming down with rates, maybe I think there's a little bit of hope that, the Eastern European countries could see a little bit more risk appetite too. And certainly that argument gets another boost when you think about China.
Jane Foley, thank you so much. Nice update on China there, and looking for the big figure. I learned that from Bob Cinch. You say big figure. I don't have the red Ferrari, but you say big figure, and you're like a big deal in foreign exchange.
Mr. Cinch still in Connecticut?
Mr. Cinch, he's running a goalie camp.
I got you.
It's amazing. He said he had no idea how lucrative it'd be. He gets these parents. Yeah. They want their kids to be an NHL goalie.
They want a grizzled veteran.
Yeah, they want a grizzled veteran in there. And, he just runs a really, really strict goalie camp.
Wow.
It's like, it's like D1 bound, that kind of thing.
His nephew is my dad's student.
Oh, very cool.
So.
Okay.
There's the Venn diagram.
We have an inflation report in 5 minutes. Joining us now, Ira Jersey, Bloomberg Intelligence on fixed income. Ira, I got a Segui here. I got to get this in before we have the fireworks of the inflation report. Early Premier League. Come on, Aston Villa up with the big boys. Were you surprised?
Up there, yeah, a little bit. But now we're getting into Champions League time, so I'm worried about their squad depth, quite frankly, because with all the games that are coming up.
And injuries coming up. Mr. Emery is the coach. He's getting a lot of press. New York Times writing him up this week. What's his pixie dust at Aston Villa?
He knows how to win, and I think that's really important. So he did it with Sevilla. He really knows how to win some of these European competitions too, like the Europa League. He almost always brings teams that are kind of lowish on the low end of the big names in each league that he's coached, and he brings them to Europe and they win.
Ira Jersey, thank you for that perspective. Oh, yeah, there's an inflation report. Ira, I'm worn out by the tension of inflation reports. The vector is disinflation and stealth. It's almost a CPI snooze fest. Why is this report important in 4 minutes?
Yeah, just because the Fed, this is what the Fed looks at, and the weightings are a bit different than CPI. But we know after getting the CPI and PPI reports more or less where this report's going to come out. There's some people, investors, who were talking with me this morning, and they were like, "Well, is it going to be a high 0.1 or a low 0.1? Like, are we going to get like a 0.12 or a 0.16, like 4.5, right? Like, there's all these permutations. Like what does the headline mean? But if we see a 0.1, even if it's a quote unquote high 0.1, that still shows, like you said, Tom, there's a disinflationary trend going on, and that's one of the reasons
why Ira Jersey is important.
Yes.
Okay. When Dominic Constant and Ira Jersey were holding down the fort at Credit Suisse, there was nothing to 2 digits or 3 decimal points or 4 decimal points. It was legitimate concept to figure out where you're going, David Gura. I can't see Jersey doing high 0.1, 0.2, whatever.
Ira, help me understand sort of how important, picking up on what Tom said, looking at the balance between the various blends of economic data that we're getting now, versus labor versus inflation, is this of less paramount importance than it used to be?
Well, no, I think the PCE deflator and all of the inflation numbers are very important. I think that there has been a shift, to your point, I think, David, in that if you go back 18 months ago, everything was about inflation. Basically, the Fed had one mandate, and that was get inflation lower, get inflation under control. And now that mandate is more in balance. And you've heard Jay Powell talk about that. That's been shifting more or less probably over the course of the last 6 or 8 months, where as inflation's come down, you've gotten the PCE deflator below 3%. Now you have to consider, okay, where's the overall economy? In a situation where the job market was bad, but you had inflation of 5%, the Fed would probably still be focused on inflation. That's just not the point anymore. Now it's okay, the labor market is not as strong as it used to be, although it's still not terrible, quite frankly. So the Fed feels comfortable easing policy. Whether or not they'll have to stop early and maybe only cut to 4% is one of the reasons why we have to focus both on the inflation data and the jobs data when we get it in a week's time.
We're going to stay with Ira Jersey here to get perspective coming up. See how the bond market moves. I'm looking at the 10-year real yield, 1.61%, maybe elevated a little bit through the week as we see the yield regime push higher. The 30-year bond, Jersey never looks at that.
Never.
4.11%. So what we're going to do, we're commercial-free across the nation. Around the world, we thank all of our people for that. Interactive Brokers, CohnReznick, as well as Commonwealth. And, of course, we'll get to the Commonwealth statement here in a moment. But Ira Jersey here, 1 minute away from this key inflation data. And then we go stronger. Lindsey Piegza will join us. And she's been really, really persistent about everybody slow down. What is it, David, 47 rate cuts?
Yes.
Before spring training?
It's at the high end.
I think it's and Lindsay's saying no way. She's just saying absolutely not. So this is strong. Stay with us. Dr. Piegza will join us from Stifel. We're going to have Ira Jersey back with us in about 45 seconds. This is on inflation and what it means for the Federal Reserve as they meet. Let's remember they have 2 meetings before the end of the year. November 7, 2 days after the election, will there be an election decision by November 7? And then December 18th to round out the year. So that'll be interesting to see this inflation report and the FOMC effect. And now from New York with the details is John Tucker.
All right, just coming across the PCE inflation, we're expecting 2.3%, at least that's according to the Economist surveyed by Bloomberg. Still waiting for that. So let's go to personal income. That is up 0.2%.
Lower.
The expectation was for 0.4%, 0.3% the prior month. Personal spending also lower. up 0.2%. The expectation was for a rise of 0.3%, and that's down from 0.5% from the prior period. Still waiting for the inflation data. PCE index month over month up 0.1%. That's right in line with estimates. The PCE price index month over month again up 0.1%. And here we go, the bigger numbers, 2.2%. The PCE inflation. This is on a year-over-year basis, the Fed's preferred measure. So it's coming in a little lower than expectations and down from the previous month.
John Tucker, thanks so much.
But in the ballpark, yeah?
Within the ballpark.
No, I'd say futures up 3. They doubled. Futures up 7 right now. Yields have come in. And again, I look at the 10-year real yield. It comes in a little bit. This is Jay Powell friendly. I think we're going to hear that from Ira. We're talking here, folks, to give Ira Jersey the pro to actually digest the data, as he can only do with the Bloomberg professional service. But I'm sorry, David, this helps out Jay Powell. Personal income in a little bit. Personal spending in a little bit. We don't have the revisions on that yet. That's important. But core PCE was a 0.2, and it came in south. 0.1, maybe rekindling the disinflation tone. And then, you've got some other inventories in that. But all in all, this takes it away from the inflation fear. Futures were up 3. They're now up 6. Sure, and I don't want to make a big deal about it, but nevertheless, something that Jay Powell can sink his teeth into. Ira Jersey, please, from Bloomberg Intelligence, your thoughts.
Yeah, I think your analysis is spot on. I haven't been able to dig into the details yet.
Ira, if this gig doesn't work out, I'll be singing.
I think he's talking about my analysis.
Oh, yes. John's
Yeah. This definitely has to make Jay Powell and the Fed feel pretty decent about their decision to cut 50 basis points. Getting a 0.1 on inflation is important, but I think the fact that you've had a deceleration in spending and incomes certainly is again another trend that some people were worried about. Where if the economy remained okay and the consumer didn't start to have some cracks, then there was a fear that maybe the Fed cutting would actually just put fuel into the fire and inflation might reaccelerate. But at least based on this one data point, and you can't take so much away from this one data point, but based on this one data point, they clearly had some good information in terms of their forecast for at least the very near term. Looking at the price indices, and I think it's interesting to note that the year-over-year price index came in a little bit soft. So very close to their 2% target, right? 2.2% is not far away. And actually, you'd have to say that, look, if it was 2.2% persistently forever, the Fed would still declare victory on inflation.
Just kind of picking up on what you're saying about this one data point and how you look at it. I think my theme for the morning is how much is it data-driven Fed or data point-driven Fed? Maybe I'll throw this out there. You can comment on it, Ira. Tom, you can opine on this if you want as well. But do you see this in a larger context, or are we still looking at this as point by point, Ira?
Yeah, well, it has to be point by point, but it is the larger context in terms of the trend, right? And we know that the disinflationary trend is at least continuing and confirmed by this report, as opposed to stabilizing or accelerating. There is a non-zero chance that inflation next year could start to reaccelerate if we have tariffs or something that wind up affecting goods prices and corporate margins start to get squeezed, and corporations don't want to don't want to cut prices and need to raise them, in fact, in order to keep their margins reasonably high. Those are all question marks that we'll only find out over time. But based on the current trend, based on most forecasts, it looks like we have this this longer term disinflationary trend is still intact, and that's something that is going to give give comfort, quite frankly, to the doves on the FOMC.
We're going to talk to the Harvard football coach here later in the 9 o'clock hour. I'll be waiting, Ira Jersey, for the Harvard economic coach, Jason Furman, and his annualized trends, which clearly show a vector of disinflation. How many months out now, how many quarters out now are we from the pandemic where we're pandemic-free, stimulus-free?
Well, we're not stimulus free yet, So one of the ironies is anytime a politician tells you that they're shovel ready projects, that shovel ready plus 2 years or 2.5 years. So we're still seeing even some of the 2021 stimulus flowing through, and plus you have the IRA is also throwing it still has some money in the system as well. That is slowing, right? There is less stimulus being put into the economy today than there was a year ago, and that'll decrease again next year. But there still is some fiscal stimulus going on. When you look at deficits, it looks like we're going to have the Treasury Department is going to have issued $1.6 trillion in the fiscal year that ends today. So, when you think about, $1.6 trillion, that's a non-trivial, stimulus that's still going through just because you have this pretty large deficit, totaling, 4+%, 5% of GDP. So as we get into 2025, a lot of that stimulus does start to taper. And as that occurs, you'll have to, hopefully continue to have a decent economy. But I'm skeptical that we're going to be able to maintain these types of economic levels over the next 6 to 12 months. And I do think that we're probably going to see a recession next year.
We continue with the Ira Jersey of Bloomberg Intelligence. A few more minutes. Dr. Piegza of Stifel is on deck. Lindsey Piegza with a really strong opinion about the certitude of soft landing. She pushes against that. Akshay Singhal will join us from Citigroup on short-term paper and FX as well. And then Gina Martin Adams will join us at the top of the 9 o'clock hour on earnings and the equity markets forward. Nassim Taleb will be with us at 9:15. Ira Jersey, one more question, if I could. The visibility of the 10-year yield and a fan distribution around it. Out 12 months, where's your single point 10-year yield, and what does the fan distribution around it look like?
Yeah, so we actually put out a note on that earlier this week, Tom, where you could actually go in and put your own probabilities of a recession or a reacceleration in the economy, and it'll spit out where the 10-year yield should be. We think that we're going to rally a little bit more, and that's on slowing economy, continued disinflationary trends, at least going on a little while. But ultimately, by the end of next year, we think that 10-year yields will start to rise again. So even though we might trough around 3.4% or so on the 10-year, so not that far from here, another 25 or 30 basis points. We think by the end of next year, we'll start to price in Fed hikes in 2027, 2028. And so you'll wind up seeing a steepening of the curve.
He's like, how does he do that? How does he go out to 2027, David? I don't get it.
The market goes out to 2054, Tom. I mean, come on. You have to have a forecast for something.
Chastised by Jersey. Ira Jersey, go away with Bloomberg Intelligence. Thank you for some wisdom there. Jersey lifting the market. Futures are up 3, then up 6. Now futures up 9. NASDAQ futures up 0.2%. Our economic indicators, even when I get them wrong and Ira Jersey corrects me, economic indicators are brought to you by Commonwealth, supporting more than 2,000 independent financial advisors, a 2-to-1 advisor to staff ratio, small firm attentiveness, big advisor impact. Go to Commonwealth.com to learn about their consultative support and technology. Dying to talk to Lindsey Piegza of Stifel. She's really pushed against soft landing certitude. Dr. Piegza, thank you so much for joining Bloomberg Surveillance. How remote is a soft landing?
Well, I think it's still a possibility. It's still out there as a potential for the economy, but it is going to be challenging for the Fed to achieve that. Remember, part of the soft landing is instilling price stability on a sustained basis. So getting us back to 2%, not just touching it, but maintaining that, along with the prospect of avoiding a downturn. Now, I do think on the growth side, at least in hindsight, the U.S. economy remains on solid footing. But I'm not convinced that the Fed has the focus, has the stomach to get us back to 2%. They seem to be very complacent at this point with this very tepid, somewhat sideways and uneven movement in inflation at this point.
I know they would beg to differ. We have heard such adamance from the Fed chair about that 2% target, but it raises this larger question of, when do we get there? There will be no declaration of victory, of course, but what's it going to take for you to say, look, mission accomplished, pick your trope, the Fed has been able to win this fight?
Well, that's right. The Fed's forecast does not look for 2% on a sustained basis until 2026, so some 2 years from now. But in order for me to get an increased level of confidence that we will get there eventually, is further meaningful progress. Now, this morning's report was encouraging when we look at the headline number, but the core, after several months of sideways movement, has now ticked higher. So we're moving in the opposite direction of that 2% price level. And you have to couple that with the lack of movement that we saw in the core PPI, the core CPI. So there's a number of key inflation metrics that are showing no further improvement, offering no further confidence to the Fed that we are on a sustainable disinflationary trend. So I do find myself in the camp of the sole dissent in December, Michelle Bowman, saying, no, there's still inflationary risks out there. There's upside risk potential, and we need to stay focused on that inflation component of the dual mandate.
Lindsey, if you and I were in the Eccles building looking at that dashboard, looking at all of these data in complement, what are the types of data that stand out the most to you as most important here as we move ahead?
Well, I think as the Fed is looking at, the key data points are the inflation data and the reads on the labor market. But what's interesting is when we look at the labor market data, independent of any commentary from the Fed or the media, the market, the labor market is still near full employment. The unemployment rate, yes, has ticked up from a low level, but we're still at 4.2%, well below what the Fed designates as that full employment range, the desirable or a sustainable level of joblessness. Jobless claims have not ticked any higher. So the other side of the the other side of the labor equation, job destruction is not seeing any upside movement. We're still talking about over 7 million job vacancies. And on average, we're still creating over 180,000 new payrolls month to month. So that's still indicative of a tight-ish labor market.
If you're joining us, Lindsey Piegza with Stifel. Thrilled that she's with us today after this report. It lifts the market. Quiescent CPI, PCE, I should say, price index. Futures up 3 now, up 9. NASDAQ up 35 points, 0.2%. Small cap leads the way up a solid 0.9%. The VIX comes in ever so slightly, 15.29. Looking at the yield space, 10-year yield 3.77 and 3 basis points. I always look at the 10-year real yield 1.60, comes in 2 basis points. Sort of inconsequential. It's now time for the math portion. We do this with Piegza of Stifel.
John and I are going to get a coffee while you do this.
Lindsey, I'm going to cut to the chase. From the cheap to the high Fed funds rate. We have a belief in 8, 9, 10 rate cuts to come to get back to the center tendency, 2.8-ish, 2.9-ish, maybe 3% as well. To me, it's wildly nonlinear. Aren't the next 25 or 50 basis point sort of a non-event, and the real sweat for the Fed comes, say, the spring of 2025?
Well, yes, in the longer term and in terms of the longer term timeline for getting us back to neutral. But I would push back and say that the next 2 meetings are going to be key in terms of setting the tone for the Fed's willingness to remain data dependent. If we see a stronger than expected labor report coupled with this morning's somewhat disappointing move in the core PCE, I think the Fed is going to have to respond with a much smaller rate cut or a potential skip of a meeting. And if they don't, that's going to send the message to the Fed that maybe they're less data dependent than they're indicating, and they are on somewhat of a blindsided focus to get us back to a particular position in policy, regardless of what the data is saying.
Across the history of the Fed, and particularly the more modern Fed, which labor statistic really matters? Is it non-farm payrolls? Is it the unemployment rate? Is it something David Gura and Tom Keene don't understand?
I think the Fed's going to look at a number of factors, but if we had to look at one, it's going to be the unemployment rate. It's going to be that fluctuation into or still away from the full employment range. Now, the non-farm payroll number certainly seems to set the tone for market expectations, but when it comes to monetary policy, Fed officials typically focus on that unemployment number to really gauge what the momentum is in terms of labor market conditions.
What you heard there, folks, really, really important. David, I want to stick you in. Folks, again, we're commercial-free for across this hour on the PCE statistics. The market lifts on it as well. We thank all of our good sponsors for allowing us to do this. David Gura, Anna Wong at Bloomberg Economics, and she pushes against Dr. Piegza. There's no question about that. She's got non-farm payrolls, 3-month moving average, 116. She does a revision, which is hugely controversial, and lowers that number. And that's a polarity between Wong and Piegza.
Lindsey, let's marry these hard data with the softer ones. We had Dana Peterson on the show a little earlier in the week and talked about those consumer sentiment numbers that were softer than a lot of folks expected, and I think spooked some folks in the market as well. How do you look at them in complement? And you were talking about what would happen if we saw a real sharp decline in employment, for instance, how the Fed would react. How would both investors and consumers react to that as well? Because that has to be front of mind for Fed policymakers too. Yes, they're kind of looking at this in a very, in this vacuum of looking at it from a policy perspective, but they have to be aware or cognizant of how people are going to react to what they're doing as well.
Absolutely. And we have to also be aware that not all the data is going to point in the same direction. This is not going to be an easy decision for the Fed or an easy interpretation for the market by any means. But when we look at some of this secondary and tertiary data, what we're continuing to see is an ongoing resilient consumer. Now, as we saw this morning, somewhat softer income and consumption numbers, but looking at the Q2 GDP report, we anticipated that. We knew what the third month was going to be. But when we look at that on average, we're still talking about a 3% growth rate and a 3% spending rate. That's still very indicative of a solid economy and an economy that can withstand a very slow and patient removal of policy firming. So I go back to the Fed's decision in September. The biggest risk of a 50 basis point move was always sending an inappropriate signal of concern regarding the state of the U.S. economy, the current level of weakness, as well as an inappropriate signal that the Fed is willing to rush back to a state of not just neutral, but accommodation to provide stimulus to an ailing economy, as opposed to simply removing their foot from the brake and moving back towards neutral as the data begin to normalize.
Lindsey, one final question here, and this is immense respect, and part of the Piegza charm, folks, is she's out in the Midwest. She's putting up with Cubs, White Sox, and all that. Lindsey, seriously, the Fed has to aggregate towards one policy. Can they not do that because the American labor economy and the personal income around this polarized economy is so split? Can they not succeed at aggregating?
Well, it is difficult. When we talk about the resilience of the consumer, it is dangerous to paint with a broad brush because we do see that those at the middle and the lower end of the spectrum are having a much more difficult time faring in this environment amid higher borrowing costs, higher prices, the resumption of student debt payments. Meanwhile, those at the top are not necessarily feeling a pinch amid a growth of household net worth over $16 trillion in the past year. So we do see two very different themes in the underlying consumer. And it's not a difference of haves and have-nots, but asset holders and non-asset holders. So that is complicating Fed policy, but that's nothing new. We always see that bifurcation. But what we do see, which is new, is this growing divide among Fed officials themselves. While the median is looking for 50 basis points by the end of the year, 9 Fed officials say, no, we're going to see maybe 125 basis points cut or no further adjustments.
This is great.
So that divide alone, I think, underscores how difficult the December decision was and how difficult further decisions are going to be.
David, if Piegza was a governor, she'd dissent at every meeting. She'd be the Catherine Mann of American economics.
No more unanimity.
She'd be like pounding the table, Jay, no, don't do it. Lindsey Piegza, thank you so much. It's Stifel there pushing against the soft landing. We've got a huge hour and a half coming to you. Nassim Taleb will be joining us in the 9 o'clock hour. From the Interactive Broker Studios, our Bloomberg Business Flash, John Tucker.
All right, stocks are up, yields are down, not by much. Dow futures right now after that report, 94 points higher. That's up 0.2%. S&P futures up 12, that's up 0.2%. So if we stay on this course, the S&P 500 on course for another record close. NASDAQ futures right now up 46, up 0.2%. 2-year yield, the more policy reactive 2-year, down just about 5 basis points, 358. The 10-year, 4 basis points lower, 375. Rate of inflation continuing to get better. This is what Fed officials want to see. Fed's preferred inflation measure very close to their target, coming in at 2.2%, lower than expected, lower than the previous reading. Spending and incomes also rising, but lower than expected, lower than the previous month. And again, futures are pushing higher right now. If you don't really care, if you think inflation is now in the backseat, or the trunk of the car. Don't worry. The jobs report, that's out next week. And milestone alert, I'll do this real quick. Assets held by exchange-traded funds in the U.S. have now hit $10 trillion for the first time ever. That's a milestone. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. David.
Trunk of the car.
Well, it's metaphor, David, is what we call that. See?
John I thought it was a New Jersey thing.
Thank you
we
so
put
much.
People in the back of cars, the trunks in New Jersey.
Keep it up, John. Bloomberg Surveillance this morning of the inflation report, brought to you by IBKR Financial Advisors. Switch to Interactive Brokers for lowest cost global trading and turnkey custody solutions. No ticket charges, no conflicts of your interest at ibkr.com/RIA. We're out on YouTube. Subscribe to Bloomberg Podcasts. That's the best way you can help the Gura household, is to subscribe to Bloomberg Podcasts. Good morning on your commute across the nation on Apple CarPlay, Android Auto, on the corridor from 99.1 FM Washington up to Bloomberg 1130 in traffic-congested New York, and to 92.9 FM in Boston. Good morning. As well. We continue commercial-free in this hour. Joining us now, Akshay Singhal. He's a Citigroup. We had Jim Caron on from Morgan Stanley, so we had to equal Butler's Caltech Engineering.
Requirement. Joining
us now from Caltech, of course, with all the mathematical rigor, Akshay Singhal of Citigroup. Akshay, I love what you have. There's two Powells that showed up. There was Powell at Jackson Hole speaking for himself, and you write Powell at the press conference more towards the committee. Which Jay Powell is Akshay Singhal focused on?
Thanks, Tom. Yeah, I do. I totally agree. I think we do have these two different versions of Jay Powell, and it's almost like, which Jay Powell, will the real Jay Powell please stand up? And the real one is, quite frankly, the one at Jackson Hole. And that's what we saw him being able to push through that 50 basis point cut in the September meeting. And then he had to kind of, hit some hawkish notes in the press conference to kind of signal for Bowman and the other more hawkish characters. But when you do have a chair of the committee who leans one way or the other, either the chair is going to move back to the center of the committee, or the committee is going to move. And, my bet's on the former. I think the committee is going to start moving much more towards the dovish side and fall in line with Jay Powell from Jackson Hole, and really focus on the labor market, not on inflation.
I think that's the first Marshall Mathers Eminem Slim Shady reference we've had on Bloomberg Surveillance, but I applaud him for that.
I do think with Ken Pruitt years ago we did it.
Fair enough.
Let's get one more in here.
I'm curious just about what you're talking about, the unanimity that Jay Powell has had over these last many years. We saw some slight erosion in that, I think, at this last rate decision. What's your perspective on how he has been so effective at doing that? What the particular charm is of either Jay Powell, the one that we're seeing public facing, the one speaking for the committee or for himself, and what's the consequence of him losing that grip on unanimity?
I don't think it's as significant. That unanimity and that push towards that is not as significant as I think in some other periods of like the Fed. And I think having a dissent, and granted it was the first dissent by a governor since 2005, but I think it shows that healthy debate. It shows that there is still some concern about inflation, or perhaps there was still some concern about inflation. Now, I would actually somewhat disagree with the previous guest. I think inflation is firmly in the rearview mirror, and this print today of core coming in at 0.13 really should indicate that it's not the focus anymore. So Powell shifted at the end of August in that Jackson Hole speech to basically say, I'm focused on the labor market. Waller came out and said that the last CPI print made him shift, and I think the rest of the committee with this print will shift.
Actually, we've got to be short here. We're just running out of time. We hope to get you back. I mean, soon. Like in the next week or two. Akshay Singhal with Citigroup, just too short a visit. We'll get him back for some real important focus wrapped around the dynamics of what we're witnessing. What we're witnessing in the equity markets, futures up 3, up 7, 8, 9. They've come back a little bit, up 7 right now. I'm going to call it a churn to the market, but with a bid underlying. DXY shows a little bit weaker. Maybe some tension there. Yen off Japanese politics. David Gura mentioned LDP elections, a new prime minister in Japan, and significant yen strength, a 142.59. A 139 close on yen would be a big deal. We're not there yet. Please stay with us in the next hour. Nassim Taleb, a spirited conversation, a spirited young Stephen Winwood.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Are these stocks under-owned by institutional Wall Street?
A lot of these companies talking about generative AI.
With Lisa Mateo on markets.
Investors just worried about the ongoing sales slump in China.
And Michael Barr with news.
A ship traveling through the southern Red Sea has been attacked.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Paul Sweeney, Tom Keene, Michael Barr, Lisa Mateo. Mateo out. John Tucker in for Lisa Mateo. Sweeney out. Gulfstream down to are you in the research triangle down there?
Yes, it is one of the points of the triangle. But the RDU is the airport, Raleigh-Durham International Airport.
RDU. Is there separate airports for Duke and UNC?
You know, UNC does have its own airport. There's an airport road that runs through town. Anyways, a small place. You could get the Gulfstream.
Big football game today. We say good morning to Paul Sweeney on assignment. David Gura sitting in, which is important with the key Bloomberg poll. We'll get to that within this hour. David's been working that since 4 a.m. This morning. Really close race for this presidential election. One key insight there, David, right now.
The ground that Kamala Harris has made up when it comes to the electorate's perception of how she would handle the economy. Different from how they perceived President Biden if he were running.
An incredibly busy hour. Nassim Taleb will be with us here in a bit for an extended conversation with Scott Patterson. We'll get you through after PCE. Futures up 7, Dow futures up 75. Bloomberg Surveillance this morning brought to you by BAM Mutual. BAM Mutual, they insure municipal bonds that finance essential infrastructure and provide guaranteed income to improve any portfolio. Be part of Building America. Invest in BAM, B-A-M, invest in BAM, insured bonds. From the Interactive Broker Studios, our Bloomberg Business Flash, John Tucker.
All right, right now stock futures indicate a higher open on Wall Street. They're higher, not by a lot. Yields, they're lower after the data, the Fed's preferred measure of underlying inflation. Also, household spending rising modestly in August. So this all underscores cooling U.S. economy. The core personal consumption expenditures price index that strips out food and energy increasing 0.1% from July. That was the smallest gain in 3 months. On a 3-month annualized basis, the measure rising 2.1%. and that is just about in line with the Fed's target. Right now, the Dow futures 75 points higher. That's up 0.2%. S&P E-mini futures 7 points higher. That's up 0.1% right now. The Nasdaq futures 22 points higher. That's up 0.1% right now. The more policy reactive 2-year yield. Right now, it's down 4 basis points. That's at 3.59. 10-year yield 4 basis points lower. That's at 3.75. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. David and Tom.
John Tucker, thanks so much. Joining us now from Chicago, where she's interviewing to be the general manager of Chicago White Sox, Gina Martin Adams. Gina Martin Adams joins us here on your stock market, your bull market forward. Gina, I'm going to cut to the chase. There's all this noise, China this, China that, Are we just discounting still double-digit earnings growth?
I think it's a great point. Is the macro has oftentimes overwhelmed the earnings in terms of commentary, but ultimately earnings drive stock prices, and earnings have frankly continued to surprise the consensus. Right now, the analyst consensus is looking at close to 10% earnings growth emerging over the course of the next year. I would say the stock market is pricing closer to 5 to 7% earnings growth, just based upon what our macro models suggest. What's been so interesting about the last 2 years, and I think this persists, is the macro has been closer to what the market prices, where the analyst consensus, even though they've been conservative, are still not bullish enough. And so that big divergence is what has created the uptrend in stocks. Is we persistently have this sort of negative undertone, this negative view that is embedded in the psychology, that's embedded in prices, but kind of the reality on the ground from corporations is that things are still improving and have been improving really since 2022, and that doesn't appear to be changing. Analysts are slowly getting on board with that. So certainly they're, expecting better growth in the next 12 months than they did 12 months ago, but it is a slow sort of climb.
Textbook Gina Martin Adams, and she combines this, like Ed Hyman, with fundamental analysis, technical analysis, and a respect for the economic. Gina Martin Adams, what does the bull market chart tell you?
Oh, well, I mean, look, the trend is your friend. The stocks are still
to the late Marty Zweig.
Up and to the right? So very simplistically, when you're making new highs, and more than 70% of stocks are still trading above their 200-day moving average. So contrary to popular belief, breadth is still improving. We're making new highs. Even small caps are showing some signs of clawing their way out of their bear market condition that has existed for the better part of 3 years. There's just not a lot in the charts to complain about. If there is anything to complain about, it is really about leadership inside the market, where we do appear to be sort of grappling with a potential leadership change away from the Mag 7 toward the 493, other stocks in the S&P 500, sort of away from predominantly growth towards some more value-oriented industries. There are a lot of internal churning happening. But nonetheless, markets are still making new highs, especially the S&P 500. So there's not a lot to complain about from a technical perspective. The only thing that I would say from a broad charting perspective that we're watching with a really close sort of eye is what's happening with momentum. When we look at what's happening with momentum in the S&P 500, it's been struggling as a result of this internal churn. It certainly has confirmed the recent rally off of those October sort of depressed lows. But nonetheless, it's not as positive or not as strong as we would like it to see, or like to see it. And I think that that's something to watch going forward. We do need to gather a bit more momentum to sustain the gains that we've had.
Gina, great to talk to you. And I wanted to ask you about this China story that we've been following over the course of the week and what it means for U.S. investors. We talked a little earlier in the show about the PBOC put on Chinese equities. What does it mean for the palatability or attractiveness of Chinese stocks, what the bank has done this week?
Yeah. I think it's been tough in China. Honestly, we've had, a series of stimulus measures all year, from direct purchases of assets in the market to changes in policy rates to the news of this week. To the degree that it ultimately creates some more stability in economic conditions, that's the thing that I think can draw investors back into China. It's a wait-and-see approach, though, with respect to China. And it's been such a difficult run for the last several years as a global investor starting to think about investment in China that we've had a proliferation of EM equity products excluding China, just to try to get at where the other growth opportunities are in EM. So, I would say we need to see this manifest itself in real economic conditions and, even more importantly, real earnings growth prospects improving for China. That's a long time coming yet, because when you look at EM equity revisions ex-China, they are surging. Equity analysts are getting much more optimistic about the outlook for earnings growth outside of China, and analysts are not telling us that things are getting better in China yet. So we need to see that momentum turn around there.
I got to ask you this, Gina. I know you're not on speaking terms with Allison Williams, but the banks for end of Q3, what is their business plan for Q4? How bad are the cost cuts going to be?
Yeah, I think, first of all, I'm on great terms with Allison Williams, and I think she's a brilliant analyst in terms of...
All those HR courses help Gina.
In terms of financials, I think that it's going to be really interesting coming into this quarter because the banks spent so much of their time really cutting costs back in 2023 that's been a bit of a tailwind, right? Remember, 2023 was the year in which we saw tremendous provisions, a lot of concern about loan losses emerging in commercial real estate, decent amount of cost cutting coming out of that sector because the yield curve was tremendously inverted, right? We've come off of that deep inversion in the yield curve over the course of the last several months. That improves the outlook for net interest margin for some of the segments, but it's still tough going. What was most interesting out of the second quarter is that financials, for the first time in a long time, beat on top line. We saw better revenue growth out of financials than we've seen in a very, very long time. That's what I'm looking for going into third quarter, because that's what's been missing in financials for the better part of 5 years, not just sort of short-term what's happening with a lot of cost cuts. When we get into October, and then even more importantly in the January season, though, I think you do want to start looking for layoffs. Are we going to see a surge in layoffs again? This sector has been a big, persistent part of that story from 2022 on. Financials, as well as technology companies, communication companies to a slightly lesser degree, have led the layoff trend. They've kept costs very, very lean, and that's enabling margins to continue to stay afloat there. So there are a lot of moving parts to watch for in financials. It's frankly one of the sectors that we've been watching most closely in this rotation, because we are seeing much better growth start to emerge there, and finally some investor interest. But I think that's mostly related to the yield curve so far.
Gina, don't take the White Sox job unless you can clean out the bullpen. Gina Martin Adams from Chicago, where she's on a job interview at Comiskey Park, which I will always call it.
I'm going to fact check this entire interview.
Grandpa took me to Comiskey Park. I saw Nellie Fox a few years ago. Only Michael Barr on the planet knows who Nellie Fox is. Futures up 10. Gina Martin Adams lifts the market. With our news in New York City, Michael Barr.
Thank you very much, Tom, David, John. We have breaking news. New York Mayor Eric Adams has arrived at court in Lower Manhattan a few minutes ago on charges of accepting illegal contributions. He was indicted yesterday. It contained 5 charges alleging that the Democrats solicited and accepted bribes or illegal campaign contributions from wealthy Turkish donors in return for various favors. Adams' lawyer, Alex Spiro, told reporters yesterday this is not a real case.
The consulate general calls the mayor. He asks for courtesy. New Yorkers do this all the time. All the time. The mayor tries to see if something can be done, and if not, he'll manage expectations. And when the consul general calls back 5 days later and asks the mayor to make a phone call, he doesn't even pick up the phone. Doesn't even attempt to give that courtesy.
Adams this morning gave a thumbs up as he entered federal court. Florida officials are beginning to assess the damage from last night's landfall from Helene. It hit the Florida Panhandle as a Category 4 hurricane, leaving a trail of destruction. Florida Governor Ron DeSantis urged residents to use caution if using generators.
Do not use a generator inside your house. There have been power outages. There's going to be more power outages. You can use a generator, but make sure you're running it outside your home. Keep it away from windows and keep it away from the doors.
Helene, now a tropical storm, is affecting parts of Georgia and North Carolina. Israeli Prime Minister Benjamin Netanyahu is scheduled to address the United Nations General Assembly today. Bloomberg's Ed Baxter has a preview.
This comes as he is now saying that the military bombing of Hezbollah targets in Lebanon will continue indefinitely. U.S. Defense Secretary Lloyd Austin says another full-scale war would be devastating for both Israel and Lebanon. Netanyahu's address comes a day after Palestinian Authority head Mahmoud Abbas said regarding Gaza, "We will not leave, we will not leave." Ed Baxter, Bloomberg Radio.
Global news 24 hours a day, and whenever you want it with the Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Tom, David, John.
News flow has been so extraordinary this morning. We've just barely got to this. But Michael Barr, usually most teams have what, Michael Barr? 2 rookies? 3 tops.
Yeah, the whole blasted team is almost
they
rookies.
Have 12 rookies. I mean, the other day there was a guy on 1st and 3rd, and neither of them looked like they could get a drink at a bar.
But now they're 85 and 74. The magic number is 1.
And they're up against the dreaded Chicago White Sox. Oh. So, it's going to get done.
A victory from us means that we send the White Sox to the worst record ever in Major League Baseball.
Is he gloating when he says that?
Yeah, he is.
Yes, I am.
Did you see this coming? Because I did not.
No, and Detroit is electric because nobody in Detroit saw this coming.
Okay, Michael, nobody cares. It's just in your contract. We got to do Detroit chat for 28 seconds each day. Michael Barr, thanks so much. It's going to be a great weekend for baseball. Thoughts to all of you in Aleen is Atlanta and the Mets wait for, I believe it is Monday. Futures up 9. From New York City worldwide, Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg News. And with this Bloomberg Business Flash, we have futures indicating a higher open on Wall Street. Yields are lower. We got validation the jumbo rate cut was the way to go. Monthly core PCE coming in below estimates. That adds to the case that the U.S. economy is slowing, and there could be room for another large rate cut. Personal income, spending, missing forecast. Some of the individual shares on the move this morning. Costco shares edging lower, falling in pre-market trading. The Warehouse Club reported a narrow miss on revenue estimates. Bristol-Myers Squibb rising at over 4% the pre-market. You just heard Michael do part of that story. Right now, the Dow futures up 87 points. That's a rise of 0.2%. S&P futures, they're up 9. The NASDAQ futures right now 42 points higher. That is up 0.2%. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. David and Tom.
John Tucker, thanks so much. We'll do the market opening here at the bottom, but for the next half hour, joining us here is Nassim Taleb and Scott Patterson in celebration of a brutal book. I really can't say enough about this. For Global Wall Street, I'm sorry, this is the adult book, Chaos Kings. William Cohen, he wrote a book about Duke lacrosse. It was brutal.
That, yes.
Bill Cohen just says, Scott Patterson, he's done it again, which he did in 2012 and with dark pools and all that. And the problem we got here, David, is we can spend the next 3 hours with Taleb, but we got to give some love here to Scott Patterson, who's only here because James Madison University beat Chapel Hill this week.
Bring it up again.
That happened.
Yeah, that was a black swan.
Your book, in full disclosure, I'm totally in Nassim's camp, and Nassim knows that, like wicked in his camp. So, when you set up your book, which is the Taleb team, like JMU, against the other team, some French dude like UNC, How did you
Right.
set up that polarity? Describe the tension of Chaos Kings.
Yeah, well, Nassim's belief is that you can't predict markets, so you just need to prepare for extreme events all the time, the black swans. And I contrast that with another character, a French econophysicist named Didier Sornet, who uses advanced physics and other mathematical models to try to predict these big
Yeah.
events. He calls them Dragon Kings. Which
Technical term.
Yeah.
Yeah, I call it Newtonian envy. So he's a math guy,
Yeah.
right?
Yeah, he's a math guy. He uses some
Okay.
things that could be used to predict the explosion of rockets and transpose that onto financial markets.
You got to be kidding me. Here's the reality, folks. Nassim Taleb changed the world with John and Nero in Fooled by Randomness. Everybody else would have retired to Turks and Caicos or whatever. He went on to do Black Swan, and then you and I sat on the stairs of St. Bart's on Park Avenue, and you described Anti-Fragile to me. Nassim, where is the humility among the quants in this great bull market?
The point is, you don't need humility. Humility actually is not necessary. I don't mind people are arrogant. There's just got to be paranoid about the right things, namely how much an error costs you when it happens, that ruin problem. And basically, Scott's book is about ruin problems. So you could be arrogant about everything, all right? You can be wrong all the time. Doesn't matter.
Like pandemics.
Just you got to avoid ruin. The big things. You got to be right about the big sources of risk, and the rest take care of itself.
Could I get your, having come out of the pandemic, your perspective on what happened there, largely, but within markets as well, the reaction to what we saw?
You mean the pandemic?
The reaction to it, yeah.
Okay, we were. I mean, Scott discusses what happened in the pandemic. And how we were obsessing over it. I mean, when we started the idea of Universa, when Mark started Universa, I was a passenger. I was a retired passenger, but the name Universa means universal properties, and we're talking about some universality of these classes of tail processes that generate large tail events. And I call them gray swans. Hence, that's where the name Universa came from. So, I was obsessing even when I wrote the Black Swan about pandemics, and kept obsessing. And I say, okay, I didn't remember the interview, but someone asked me, what do you have to worry about? This and that. This. I said, no, you got to worry. First thing about some germ traveling on Air France. Because Air France, you get good food, and if they're bad germs, they travel on British Air, they get bad food. So that was my obsession. And sure enough, nothing had happened since for 100 years or close to 100 years, right? So, and then people say, well, just like financial risk, people's perception for risk before the crisis, say, oh, we don't have to worry about these. They don't happen anymore.
Right.
And sure enough. All right,
Scott Patterson, you've got, one of the sections is the Boston section, the wicked problem. And the answer is flying blind. I mean, you've been doing this for 15 years at the Wall Street Journal, trying to figure out the mathiness and the certitude, and I'm going to wake up and win. We're number 6, we're going to be number 2 or number 1. What are we flying blind on right now?
I think that, right now there's obviously a huge amount of complacency in financial markets. We're hitting records time after time, and yet you look outside Wall Street and it looks pretty crazy. So there's all sorts of things that could happen, and I know Nassim wants to talk about China. I've been predicting China would collapse for 2 decades now, and they don't.
Right, be careful. Cash flow lives there, my oldest son. Be careful. Okay. China's not going to collapse. Let's do this. We're going to do China, David Gura in the next section. Okay, we got an extended conversation with Nassim Taleb and Scott Patterson. Chaos Kings is a book. Okay, I asked that question of Scott and Nassim to set you up here. We're flying blind. Nassim Taleb on private equity and private credit. It's all the rage.
Okay, the first thing I have to say is that we have a debt problem in the West. Okay, whether individual or government, you can have debt. China has debt, but you must grow. And the problem of the West is that we have an S-curve of growth, or of GDP, or per capita. And it looks like we're on the top right of that curve. So it's concave, and people have 2 cars, they have 2 homes. What do they want? I mean, have Perrier water shipped to them? I mean, so the incentive to grow isn't there. So here, it's a serious problem when you have low growth and a lot of debt. And the problem is that Western, economies have never had more debt in history.
How do our listeners...
At a time where growth became concave simply because of the nature of growth. You grow fast when you're China because you got pulled people out of the provinces and stuff.
Right.
And standards of living can still rise and make a difference.
Now, see, they're not quants at Credit Suisse years ago. They're our listeners, our viewers. They put their pants on one leg at a time. How do they hedge against your concave tensions that we're in right now? How do mere mortals hedge this?
Okay, the whole thing is, it's not a hedge. If you're investing without a tail hedge, you're practically not investing because of the ruin problem, and that's what he discusses in the book. That's my first statement. And the second one is that people are way too static. They imagine either they have a memory that's either too short or has problems updating, that they don't realize that, for example, what's happening in China is that the Nature Index of publications, that's very hard to gain. What China used to have 1%. Today it's in the 20s and rising. So it tells you that that's a leading indicator of what technologies may come out of China. So you realize that you got to look back to before 1750, around when the Industrial Revolution started. So we're starting to shift. And in 1830, China had 8 times the GDP of Britain. We're back there. Soon it's gonna. So we're going back now in time. It's like reversing the dominance of the West, not because the West is doing poorly, but because it got what it wants.
David, we're going to China right now. Nassim's running the show. We're doing China here right now. We'll do the stock market opening here in 4 minutes. David Gura on China with Scott Patterson and Nassim Taleb.
Scott, let me ask you more about, you said you've been predicting the sort of dissolution we've been seeing for 20 years. What stands out to you about this moment? We've spent the whole week talking about these kind of unprecedented actions, the way they were delivered by the PBOC in China, and what that says about the actual state of the economy there. Talk a bit about that and sort of your vantage of it, and also just sort of how much veracity we can ascribe to the statistics that we're getting out of China.
Well, as to the veracity of the statistics, who knows? They keep doing this. They hit a slowdown, and then they, hit the accelerator. They've pulled, after the GFC, the Great Financial Crisis, China pulled the entire world out of that situation by stimulus. Who knows how long they can keep it up? It's a big mystery. Right. For me, my focus these days is on climate, and the dominance of China in climate technology is astonishing. And that's the future of energy. It's the future of vehicles.
Right.
It's the future of batteries. And they're, light years ahead of everybody. We're trying to catch up. Right. Europe's trying to catch up. And that for China is a big advantage.
I got to do a shout out here with the Wall Street Journal this week with a stunning effort. China's newest nuclear submarine sank, setting back its military modernization. That was an incredible story out of your shop. Now, see, on China again, continue. Aaron Friedberg for Foreign Affairs says it's a Marxist-Leninist regime. Okay, Nobody in Beijing read Fooled by Randomness.
No, but the point is that China is the reverse of Europe. If you're small in China, you can do whatever you want. If you're big, the government calls you up for a meeting, all right? So in Europe, if you're small, you're overregulated. You got like 5 tax inspectors breathing down your neck. You got to get all these permits. If you're big, then you own the government, okay? It's particularly the case in France, Germany, practically everywhere in Europe. So China is a reverse. So they say, okay, it's capitalism, okay, for the small, and communism for the large. and it's effectively it's not that much. There's a centralized economy except for the top.
So what about America into our fractured election, our fractured nation?
Okay, I don't know about whether the election makes a difference in many respects, but we have a problem, and that problem is that our debt servicing is increasing. And I guess, did we cross, is it more than military spending? Is it more already? Okay, so, and it will continue and pay interest on that. Now you may say interest rates may be lower. I don't think we can go back to zero interest rate because zero interest rates got us here, all right? So we're going to go back to normal interest rates. So the debt problem is not going to go away. Debt servicing is going to keep increasing. And the problem is, if the East becomes, and not just China, just the East in general, becomes powerful and becomes a target of, retirement money and stuff like that, then the dollar would be in trouble. Okay. I'm just looking at it from a risk standpoint. Okay. Well, you got to solve the debt problem.
Okay, we're going to have to come back, but I agree with Nassim Taleb. What I'm looking at, folks, into 2025 is the certitude of a resilient dollar. Everybody is on a vector for the dollar staying resilient or stronger. And Nassim, of course, alludes there to what is the price of all this debt.
We're already in 23 and 24. We were talking about dollar in terms of gold. I mean, people, since 2022, when we dispossessed people by getting with taking money out of their checking account.
We got to go to the opening of the market. Do your trading over there, Nassim, while I set it up. David Gura and Tom Keene with Nassim Taleb, Scott Patterson, Chaos Kings, how Wall Street traders make billions in the new age of crisis. We will continue with Scott Patterson and Nassim Taleb. John Tucker with a report on the markets. Behave yourself, John. Nassim Taleb is here.
Very good. There you have it, the opening bell at the New York Stock Exchange, pushing higher for equities. S&P 500 on track for yet another record close. S&P 500 out of the gate up 10 points, 0.2% higher. The Dow Jones Industrial Average up 77 points. That's a rise of 0.2%. And the NASDAQ Composite Index right now 42 points higher. That is up 0.2%. In the early going, NVIDIA shares most active. They are down 0.4%. And after the Fed's preferred inflation measure rose just modestly for the month of August, underscoring a cooling economy. A look at yields right now. The 2-year, more policy reactive. Right now it's down 2 basis points, 360. The 10-year is down 3 basis points. That's at 376. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker at your Bloomberg Business Flash. Tom.
John Tucker, thanks so much. David Gura with us this morning here. It's been a hell of a week. That's all I can say. Michael Mauboussin with us 2 days ago, and Nassim Taleb today with Scott Patterson in celebration of Chaos King. Scott, what's the other side of the story here? The mathiness and certitude of Zurich, Switzerland.
Yeah, you're referring to Didier Sornet, the Dragon Kings guy. We were talking about China, predicting what happens in China. I just, after covering financial markets and talking to, hedge fund managers who 20 years ago were billionaires and now they're, bussing tables at diners. This is where I come down on Nassim's side is I don't think you can predict markets. I think it's impossible. I think that when you look at quant trading strategies, they're very short term, like over the course of a few minutes and seconds. Those are the only strategies that really survive long term. And even they, my first book, The Quants, showed how they almost blew up in the 2000s in a period of big deleveraging.
They're basically getting a higher dimensional bid and ask. Okay.
Yeah,
quickly,
they're trading bid and ask very rapidly. And that's a good strategy. But trading, making big bets on your prediction of what China is going to do next quarter, next year, or what the Fed is going to do.
I think we've seen this.
Is very, very hard to do.
My humility here, David Gura, is it's a once in a lifetime event. And years ago in the old world, which is where Taleb is from, Lebanon and all that, and over to the continent of Europe, you know, they're laughing at us about once in a lifetime event. You and I have gotten gray. Wait, Gura doesn't have any gray hair. but the answer is there's a lot of once in a lifetime events. David?
I have a question about young people in this industry, and it's inspired by a conversation I had with my friend Robert Smith, who is at NPR. He's now running the Night Badger program at Columbia. I said I was going to be talking to you today, and he said, here's what you should ask him. And he pulled up a tweet that you filed more than a year ago now. The story we haven't covered this week is Caroline Ellison of FTX getting sentenced, going to spend 2 years in prison. And you tweeted about Sam Bankman-Fried when everything blew up. You said the problem with people like SBF is knowing a tiny bit of statistics to parrot about it, but not understanding processes, that is, dynamics across time. Shakespeare has survived nearly half a millennium by filtering by time. Then you close. Sam Bankman-Fried worked at Jane Street. You write, to Jane Street, he would have flunked my job interview. What does the Nassim Taleb job interview look like? What do you ask somebody who's applying for a job?
People understand some basic things like ruin problems and understand dynamics. So, which is the same, you know, that people, if you have tiny probability of losing money, you eventually will go out of business, okay? Because over time. So if you're aware of it, that's fine. If you're not aware of it, you got a problem. The other one is sizing. Comes from sizing also. If you have the edge, you still have probability of 100% of blown up if you don't size properly. So sizing is very delicate. Two basic things. And the third one is about fat tails, the difference between thin tails and fat tails. And that's pretty much the theme of the black swan, the remedy in anti-fragile, and discussion of why people don't understand it and skin in the game.
Okay.
So the difference between fat tail and thin tail, finance is not Gaussian. Mm-hmm. Now, you know, everybody claims, yeah, we know that. Yeah, if you know that, then why are you using Gaussian tools? What tools do you use? What do you suggest? People in the street understand the Pareto 80-20. Mm-hmm. It is very intuitive. You need to learn to know some math, but not enough, okay, to get to stuck to you know, if you teach people a little bit of math, but not enough, they go to the Gaussian.
Nassim's laughing at me here right now because he knows it's a third. David, thank you. Gura and I don't speak before the show. In fact, we're not on speaking terms. Yeah. But I'm so glad you brought that up. Yeah. Nassim, come on, you know me on position sizing. Position sizing is everything. And right now we're living in a Mag 7 world where everybody, whether they admit it or not, is Scott Patterson's 401k at the Journal is loaded up with NVIDIA and all the rest of it. Nassim Taleb on Mag 7, the anti-position sizing.
Okay, so let me give you one thing since I don't have a lot of time. Okay.
Yeah,
I wrote a tweet saying that if someone gave you 24 hours in advance tomorrow's newspaper, that you would go bust. And actually, someone just tested it. Victor Hagani, formerly of LTCM, who visibly has long experience in the market, tested it by giving people over 15 years next day's newspaper and giving them, you can trade at today's price, knowing tomorrow's newspaper. And people didn't do well. Why? One of it is, of course, sizing. Yeah. They don't know how to size a position, right? When they're right, they don't know how right they are because they can't figure out how much of it is noise, right? And of course the sizing. So and it just, you know, I heard of the paper yesterday because it starts with my tweet. It's interesting to have a tweet turning into a paper by someone else.
Yes.
Like for someone lazy like me, it's perfect, right? Because tweets I do in airports typically, right? So
and that's not how markets work. The markets work on anticipation of news events. Oftentimes, when you see the Fed cut interest rates, the market will go down because it's already traded on that news.
There's a Fat Tony story in Anti-Fragile, all right? How people who anticipated the invasion of Iraq or the starting of the war against Saddam in 1991, those who anticipated it went bust. Because guess what happened to oil prices? They collapsed, right? So it's not figuring out the news. There's something more subtle about markets.
Okay. I want to get one more question here in Chaos Kings and Nassim, then we've got to talk to you about a fractured, your old world, your Europe with 1, 2, 3. They're calling them conflicts, but I think they're wars. Scott Patterson, you have such a history of writing of the tension of Wall Street. In your experience, is anybody on Wall Street putting the tension and the outcome of your books, into practice, or are we still wedded to VAR, which I know Nassim loves VAR? Has anything changed on Wall Street?
I think that's it's funny. No, I don't think that we learn our lessons. I think people are still using value at risk, even though it it was a laughing stock in 2008. People looked at this and like, oh, this is insane. We're cutting out 5% of the worst days every year, and like that doesn't matter. So yeah, no, I don't think we learn our lesson. I wanted to come back to the question of an interview asking, at a hedge fund.
Yeah.
I spoke to a while back somebody who you know at Renaissance Technologies, and the big quant shop on Long Island. Mm-hmm. One of the questions they asked prospective employees is, how does a toilet work? Mm-hmm. Which, you're talking about dynamics. I thought that's a good question. Interesting. The answer is it's a vacuum.
I want to devote the rest of the time with great honor to all the people from Lebanon that have assisted David Gura and I in what we've seen over the last weeks, days, and indeed quarters and years, led by Jumana Bercheci over in Dubai, who has been really helpful to us here. Her show is Horizon out of Dubai. Look for that. Nassim, you have lived this. You were in your family, were deputy prime ministers, you were involved with it out of the Greek Orthodox Christian sphere of a Lebanon I remember with great prosperity.
Yes.
It is shattered. What is your...
I mean, I was in Lebanon 2 weeks ago, and I go to Lebanon, I reside there part of the time. So what you see in pictures doesn't map to, and when you hear about the economy, it doesn't map to what's going on there. They've been a little slowed down by the Gaza war, some kind of rise in across all economic sectors in Lebanon on a more anti-fragile basis. In other words, the collapse of the government of Lebanon economically gave rise to decentralized municipal power and to a lot more entrepreneurship. Okay, because the central bank was conducting a Ponzi, and the Ponzi went away, and then suddenly people recovered, and 4 years later, it's on the mend, and you can see economic activity across all sectors. I mean, restaurants are all full, new restaurants opening up like every day. At least in my neighborhood, like 40, 50 past year. I mean, every day, every week. So you have so what the perception of Lebanon from the outside is quite distorted, given that I spent time there. This war, I think, is, I mean, there is a problem. Okay, let's say there is a problem. The fighting is confined to Hezbollah and the State of Israel, but of course there are side effects outside. But something tells me that if you go to a bigger war, if Israel wants to drag the U.S. into that war, then thing would blow up. But
David, one final question. David, one final question.
How do you gauge the prospects of that happening?
I think that the U.S. is resisting, and the Iranians are trying to be nice, and there is a more conciliatory tone here. So we'll see. I mean, from there you can see how irrational it would be for everyone to get involved in to broader war, particularly that long term it's not going to help. I mean, think about it. Israel had a war with Hezbollah in 2006. They got stronger. They occupied southern Lebanon, and Hezbollah been stronger and stronger. So every war is just like a delayed training program for Hezbollah. So Israel doesn't have it's in its own interest. Okay, you can't destroy a ideology. You can destroy military installations.
That's okay. I do that all the time. It's part of surveillance. Coughing on air is part of surveillance.
Tom does do that all the time.
So we got to leave it there. We're out of Nassim Taleb. Thank you so much. One of the protagonists of Chaos Kings: How Wall Street Traders Make Billions in the New Age of Crisis. Scott Patterson, thank you so much for coming today. This is a really, really important book for global Wall Street. Not so much what to do, but what not to do. Scott Patterson's Chaos King setting up the tension between two giants of investment. The Dow up 169 points. I just quote the Dow to upset Nassim.
I see, yeah.
Just gets him going. It's nostalgic. We quote in 7/8 and 3/4 here. The Dow up 174 points. SPX up fractionally. Dow with a bigger move. NASDAQ 100 going the other way. Okay, we can get upset Nassim now because he's staggering out the door. Bitcoin, 65,000. We'll ask, in our next conversation with Nassim, we'll ask him about Bitcoin.
I mean, the point is, it's still a speculative thing. Bitcoin, when you pay your rent in Bitcoin, give me a call,
okay,
and I'll come here on the show.
Nassim,
right?
we'll bring you back for Bitcoin when it hits 80,000 as well. From New York City, this is Bloomberg Surveillance. Good morning.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. After the data this morning, it looks like the S&P 500 could be on the path to another record close. Right now, the early going S&P 500, 7 points higher. That's up 0.1%. 57.52 on the index. And the Dow Jones Industrial Average up 149 points. That's a rise of 0.3%. The NASDAQ 100 right now is only 5 points higher. As for those yields, after we got that soft inflation data, the 2-year, which is more policy reactive, that is lower, down 4 basis points. That's at 3.58 right now. The 10-year yield, that is 4 basis points lower. That is at 3.75. In the commodity space, Brent crude continues its path lower, down $60 a barrel. At down 60 cents a barrel, 70.99. NYMEX crude down 45 cents. That is at 67.21. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. David and Tom.
John Tucker, thanks so much. It was great to see on the break, folks, Nassim Taleb giving John Tucker advice on his 201k. Helene has been more than difficult. Rob Carolyn, who's our fabulous meteorologist, just nailed the size of it and the rain of it. We've all seen the horrific videos, the surge and all, but we want to look forward now with our Bloomberg Surveillance News meteorologist, Rob Carolyn. Moving up, not to Savannah, Rob Carolyn, but to Atlanta and then curving to Nashville. How bad will the rains be?
Well, let's put it this way, Tom. The entire metropolitan Atlanta area is under a flash flood emergency. That means flash flooding is occurring. I can't imagine what the roads are like there. I've just seen some webcam video from Boone, North Carolina in the mountains, and the entire downtown looks like it's under about 2 feet of water. It's because this is the third day of rain in the southern Appalachians. Looking at the flash flood warnings right now, they extend from southwestern Virginia outside the Roanoke area all the way to metropolitan Atlanta, and then you've got some as far to the west as Shiloh, Tennessee. The rain, Tom, actually falling as far west as eastern Missouri and northeastern Arkansas this morning. So
Wow.
the storm has really spread out. One of the old feeder bands is still producing some rotating thunderstorms, so we're looking at a couple of tornado warnings this morning down around the Wilmington, North Carolina area, and then west of Raleigh-Durham this morning. Some areas are probably going to see in excess of 18 inches of rain by the time this system completely falls apart early next week.
Rob, we've been having some fun here talking about this upcoming game against Duke and UNC. Paul Sweeney perhaps going to be in attendance down in Durham. I talked to my dad, who teaches at UNC. I said, is this storm coming for you? He lives in Chapel Hill, and he said, yes. What is the longer-term forecast here for the Research Triangle and more broadly parts of these states that are, shall we say, a few hundred miles removed from the Atlantic Ocean?
Well, they're just going to continue to rain. I mean, if he's going to the game, I'd tell him to bring a snorkel because it is just going to pour this morning there. This is, for many of these areas, their third day of rainfall. We had rain streaming off the Gulf up into those areas during the day on Wednesday and Thursday, and now they're being impacted by the rain with what's left of Helene. It's just going to be, travel is going to be incredibly difficult across the Tennessee River Valley and the southern Appalachians the next several days.
Thanks so much, Rob Carolyn, for this coverage through the week. He'll be on it through the weekend, and we'll look Monday. And again, that key baseball match, postponed, Atlanta Braves, New York Mets. We'll see where we stand on that Monday morning. This is a joy to bring in now with our wonderful 92.9 radio coverage in Boston, a tradition of our autumn, which is Harvard football. This year is different. A guy shows up after the legend retires. Andrew Aurich joins us right now, the newly minted coach of Harvard University. Do you coach the same way, Andrew, at Harvard that you did at Concordia Academy in Minnesota a number of years ago?
Yeah, there's a lot of the carryover there. It's all about building relationships with the student athletes so you can challenge them and push them to take them further than they think they can go.
I know that looking ahead to this weekend's matchup against Brown, you have some familiarity, shall we say, with James Perry, the coach of that team. You two were at Princeton together, I believe, in the early 2010s. What could you tell us about him and the team that he's assembled and sort of the difficulty of this matchup that you've got this weekend?
Yeah, James is one of the brightest offensive minds that I've been around. Really, really creative. Does a great job with his quarterback every single year. So they have a fifth-year Jake Wilcox, a quarterback who had an outstanding year last year and is off to a great start this year. He's going to be a challenge. He's a guy who can get outside the pocket and extend plays that lead usually to big plays. And they have a pretty solid receiving core. They graduate some guys, but they've done a good job recruiting. So the development of the program, there's really no drop-off with the current guys they have at wide receiver. Definitely improved up front with their offensive line. So, just offensively in general, he's going to be able to use his full toolbox of plays that again, are very creative and challenges you defensively. Defensively, they have a really good defensive line. Last game, they had 4 sacks and 10 tackles for losses, which is a great first game for any team. And it's going to be a good challenge for our offensive line to be able to win the line of scrimmage. And they have Isaiah Reed, who's an All-American corner, who, basically can shut down half the field with his talent level.
Let me stick with Mr. Wilcox here for a moment. And, I read the Crimson to prepare for this. You look at the tape to prepare for your game this weekend. Jake Wilcox, 366 yards and a touchdown during the last matchup. 34-31 victory for the Crimson. What do you get by watching that tape? What can you tell us about how you prepare for somebody who plays like that?
Well, as I said, he does a lot of things where there might be a breakdown in protection, and all of a sudden he escapes the pocket, and he keeps his eyes downfield, which, a lot of quarterbacks don't necessarily do that once they get on the perimeter. It's like, I'm just trying to survive here. But he keeps his eyes downfield, and he's able to make big plays. So, when you do things like that as the defense, then you have to make sure that, there's no breakdown in coverage late in the down. You have to, continue to either cover your man in man coverage or, working your zone coverage to make sure that we're not leaving big windows. And the fact that he, is athletic enough to pull the ball down and run, that adds another element to that when he does get out on the perimeter.
Andrew, I got time for one last question. Jason Furman's holding court in economics at Harvard and Ec 10. I know you're doing football 10 at Harvard as well. Have you had to explain yet to your players the new kickoff in the NFL? Like you were with Tampa Bay. Can you explain the new kickoff in the NFL? I don't get it.
I really can't because I haven't dove into other than when I saw it in some games. To me, the way I understand it is you can kick it into the end zone for a touchback, but there's a penalty as far as what yard line they start at. But the NFL is trying to create more returns, I believe, and you have to drop it in the zone. And if the ball gets kicked in that zone, then the return happens. And essentially what they're trying to do is shrink down the distance between the return team and the kickoff team so the high-speed collisions that ultimately can lead to concussions are eliminated.
Andrew, thank you so much for joining us. Looking forward to speaking to you through the week. Of course, on Bloomberg 92.9 FM, Bernie Corbett giving us the broadcast here. Brown, Harvard, looking for that 12 noon tomorrow. Stopping by right now too quickly. He's literally leaving on a jet plane. It's not as romantic as driving to Heathrow. Stephen Carroll joins us. Bloomberg Daybreak Europe here for some goodbye comments.
And I've never felt more European than listening to that conversation, which I understood about 10% of.
But that's okay. Follow Tottenham football. It'll get worse. Your observation of the UN meetings that we saw this week.
Look, really interesting to see the who's speaking to who, the conversation around climate, still with the green pushback that we've seen in so many parts, particularly we're thinking about some of the European countries where the green agenda has fallen down, the political priorities. Still a lot of optimism from business leaders, from world leaders on that. The fact that there seems to be the conversation shifting to the business case and how you make these sustainability policies work from a financial and economic point of view.
We've been focusing on these major conflicts, of course, the one in Ukraine, conflict in the Middle East as well. What stood out to you from, yes, the major speeches that were made at the UN General Assembly, but in remarks on the sidelines of those as well, just about the prospects for those coming to an end anytime soon?
I mean, look, it's very difficult to see in either case. I mean, particularly in the Middle East, the escalation we've seen over the past week really shifts that into a completely different gear. This is something we had been very worried about. The question of where that goes next, extremely difficult to follow. We're watching very closely. The US election is going to shift the game in all of these things.
All right, you'll pick this up on Bloomberg Daybreak Europe here on Monday. I can't say enough about it, folks. I'm in the surveillance nap here while Carol's working away, but it comes out and they take the first 15 minutes of the show and they cram it into a podcast, which outdoes my podcast. My people said, what's going on here?
Yeah.
Carol's cleaning my clock here.
Is that what I've been called in for? Is this a dressing down?
I mean, it's amazing. You do like 15 minutes and you pop the thing out here and all of continental Europe listens to it. And what they're going to want to know on Monday is a reaction literally at this moment, Mr. Netanyahu in front of the green marble at the UN. How will you treat that Monday morning back in London?
Look, we'll have to see what happens over the weekend as well, because you're talking about not only how people react to this speech, but what actually happens on the ground. We're still watching the activity on that border. You mentioned the great Giovanna Basecci earlier. She is someone that we go to every day almost in our show at the moment to bring us the latest on what's happening from that region. Our incredible reporters across the region as well, putting in context most importantly, because if you follow the day-to-day events, it's often quite difficult to, I suppose, put that in the context of where are we going back to. 2006, you know, for people in Lebanon, this is something that to go back to levels like that is a superlative that they didn't expect to see.
Stephen Carroll, thank you so much, and safe travels. He doesn't have the Gulfstream. Sweeney has it.
Oh, yes,
he
that's
tried
right.
to get it. Francine had it 2 weeks ago.
Yeah.
And Sweeney's got it down at Duke UNC.
Right.
So Carroll's, he's going like, you know, do you stop through Dublin? Is it like Aer Lingus?
No,
through
not
Dublin
this time. I did consider it.
You did consider it.
Yeah, but this time we're just going to skip right by. Don't tell them I said that.
Yeah, don't tell the fam. Okay, Stephen
I was going to
Carroll.
make a fly through Istanbul joke, but I don't think we should be making.
No, that doesn't work today.
Too soon. Too soon.
You're going to be. Where's the courthouse downtown?
Yeah, on Pearl Street. We have the mayor in the courthouse as we speak. So meeting with the judge.
We've got to do a major shout out, and we have to start with David Gura. You've literally gone on autopilot. Seriously, you were with John Lemire earlier this morning in the Bloomberg poll, in all that. What are you going to think about over the weekend to get into the new October dash to the election?
Well, let me talk about foreign policy first, and Stephen bring up something very important, which is sort of what happens over the course of the weekend. And we've seen President Biden meeting with the president of Ukraine, and we have the Prime Minister speaking in New York now. Sort of what happens with those two conflicts and how that affects policy from this government going forward, and then sort of watching the campaign continue. I mean, I think this week was very illuminating in the sense that we knew going into it. The polls said so unequivocally, voters care about the economy, and you did have both of these candidates really doubling down on that over the course of the week, delivering speeches on it and sticking with that message. I anticipate that'll persist.
Did you get along with our team this week?
It was like old home week, and
great.
I'm reminded of how vital and necessary the surveillance map
is
amazing, on the heels
particularly
of this.
when they're awake.
Yes,
Ken Felliu, our global technical director, and thank you, Brockton, for getting it done. Giuseppe's father was just like missing in action. I mean, he's just gone all week. And Cy Benson made it work. Cy, thank you so much for getting it done here. The Dow up 177 points, SPX a little green. I'm saying it's pulled back a little bit off of that quiescent inflation report. We'll have much more on that. Alex Steele and Norma Lindy, they're steeled to get you through to the inflation report and further treatment into the 10 o'clock hour. And of course, Bitcoin 66,000 as well. Not Dave Mason. Traffic. Stevie Winwood. Good morning.
Well, boy, you sure took me for one big ride. And even now I sit and wonder why. But when I think of you, I start to cry. Just can't waste my time, I must keep trying. Gotta stop believing in all your lies.